Where was your entry and where's your stop loss, Leo? Ooh, we almost got stopped out on that NQ trade. Right before London Open. Here in 15 seconds. Pro Bitcoin, yeah, I think the same actually. NQ could go lower first and then up. But at that point I would just take a re-entry, which would be fine. The trader guy says, no trading funded accounts today, don't like price action. Well, perfect. If you don't like what you see, then don't trade. That's ideal, that's discipline, great. Usman Ali, you blew your growth account? Yeah, well, today is your chance to win another one. 50k growth account giveaway we're gonna do at 200 likes. Let's see. No, 6. The guy who posted 3 times actually disqualified yesterday. All right, 5, 4, 3, 2, 1. As Matt would say, ding ding, motherfuckers. There's the London Open. That took me out. That was to be expected. Little push down during that. Now let's see if we get further setups. Would be a pity if it just took me out and is now moving higher. But as said, we can then still re-enter the trade. No worries. SHK Hurricane. Guten Morgen. Good morning. NAVRO, yeah, it's the TTFM indicator. Yeah, Silvio, I think the same. Looking to correct to go further up. Tom, good morning, man. 22, yo, what's up? All right, Leah, let's look. So natural gas, your entry was 2.976, which we just retested. You've been in this for an hour, you said? I mean, it's not looking too bad for now. I mean, look, as long as you have, I would just set my stop, personally. I would set my stop above this swing high. Right, so 2982, 2981-ish. Yeah, 2982. As long as you have it there, you're fine. Mr. T, I should come up with my own opening bell announcement. All right, help me. What could be a nice opening bell announcement? Gold pushing up here. Oil pushing down. NQ not doing anything right now. Just took out Asia lows. They're now moving back up. Any ideas, chat, for opening bell announcement during London session? As said, Matt has his ding ding, motherfuckers, during New York. Oh, that was a nice stretch. That was a nice stretch.
Order filled.
NQ just bounced off the weekly and monthly VWAP. Let me actually turn on VWAP really quick. Oh, you have an anchored VWAP? I have the normal one. Tom, I like that. TT bloody wankers. We could call it tea time bloody wankers. I like that. How are we liking tea time? It's tea time bloody wankers. Or we could do it in Indian accent too. Sir, we gotta do tea time now, okay? Oh, did we just get bottom ticked on this?
Order filled.
Did we just get bottom ticked on this? That would be a bit of a pity. Well, let's see. We get CISD once we close through this 5-minute candle body. Leia, you think it's too British? Well. Let me actually check this out really quick. What we got. I think, guys, we got bottom ticked on this. Stop loss bottom tick. This could move higher. Well, so be it. So be it. I'm gonna re-enter it after we get a change in state of delivery here. Talk a trader, good morning, Vietnam. Chucky, swearing is not my thing. Yeah, I mean, definitely Matt's thing, that's for sure. Definitely Matt's thing. And Miriam's actually. She's holding herself back, I tell you that. Sometimes, before we start the stream, if you could hear her, you would be very surprised. I'm still liking this for longs. I got bottom ticked. They did me dirty on that one. Mario S, if you're here, that was mean. Yeah, Taco, I know. That's from the movie. Ding ding, nice and quick. Swiss precision does the trick. I like it, Leia. Yeah, we gotta have some Swiss intro actually.
Order filled.
Even though it's London session, we should still focus on Switzerland. Ding ding, the rollie is ticking. Anybody in a trade yet, guys? Besides Leia? Let me know. Are we in a trade yet? Go back to the 1 hour. Just waiting for this 5-minute candle close. If we can get change the state of delivery here, I will re-enter this trade that I got very in a very mean way bottom ticked out of. Vladimir is long, 21-7-12. 7-12. Are you freaking kidding me? 21-7-12. You bottom ticked the entry, like literally bottom ticked it. I mean, I got stopped out 1.25 points above that, but you bottom ticked the entry. That is fire, dude. No idea how you did that, but congrats. All right, a lot of you are in longs. I like it. Again, like I got bottom ticked out of this, but I do like it for longs. Not gonna lie, I'm gonna re-enter this once you get a change in state of delivery here, which we already did on the 3-minute, but I want to see it on the 5-minute just to get some extra confirmation. Leia, what's your NG trade doing? Yeah, not really much. Not really much, unfortunately. Just consolidating there. Little bit of consolidation. All right, guys, as said, like 200 likes, and we're gonna do a 50K growth account giveaway. So if you haven't already, smash that like button. Also, just a quick thank you to you guys. Like, I appreciate you tuning in to the London session. It's really fun, actually. We just started this week, a Tuesday, right? Tuesday we did the first London session, and I'm already loving it. Like, this is so much fun. Appreciate you all asking great questions, being funny in the chat. Without you, this would be nothing. Kev, is VWAP something I consider? I see we're close to VWAP on NQ, so would you wait for a breakthrough or you don't mind? Honestly, if I get a clean setup here, like we just did, I don't really mind. I do obviously check it every now and then just to make sure. But if we get a clean change in state of delivery, I wouldn't mind. I would still take the trade again. I gotta take it off now. It's bothering me. There we go. Also, this I don't need. Juby, since no one asked, how was your buttock lift? Matt said that's why you left early from the New York session stream. Matt is... What an ass. That is not why I left. It was my girlfriend's dad's birthday, and we actually went for dinner with him. That's why. They did me dirty, huh? They did me dirty. Chris, you dig my London sessions? I dig it that you're here. Thank you, appreciate it. London session is becoming a thing. The guys over at MOT are doing a ladies' London session soon. All right. Well, I can't compete against that, I guess. Tammy, loving the London streams. I've always struggled with it, and it's been really helpful to watch and learn. Appreciate you, and happy that I can help. That's why we do it. By the way, guys, for this re-entry, here's what I would look for. If I get a change in state of delivery, I would take a market buy here, most likely. Stop below the lows. Target would be Asia highs. Pretty much a 1-to-1 trade. Yeah, actually exactly 1-to-1. I would still take it. Let's see. Leia, can we test ding ding curry bling with your Indian? Should we do it? Ding ding
Order
curry
filled.
bling for the open, for the market open. All right, let's market buy this. All right, we're in this trade. As said, it's a 1-to-1 risk reward. Got my sell stop. Targeting Asia highs on this. There we go. Now let's let it play out. Obviously my risk reward before was way better. But since not a lot is happening, 1-to-1 is okay. CJ, I did click the market buy. I love market buys. Nice and risky. Let's see. Mr. T, as an Indian, you approve it? Appreciate it. Appreciate it. Ding ding gotta bling. The trader guy, damn bro, NQ did you dirty. Yeah, but hey, look, these things, like this first trade that was in, I got stopped out, bottom ticked, almost bottom ticked. It happens, right? It also happens to the upside. It could very well be, let's say that this trade right now that we're in works, hits my TP and then reverses. That happens as well. So whenever something like this happens, just don't be mad. Be like, hey, okay, cool. If I find a re-entry, I re-enter it like I just did. And if this one doesn't work out either, cool. I don't give a shit. Like, your system needs to play out over time, right? It doesn't need to play out right now. It doesn't need to play out today. I mean, so funny. Since we started the London session, during the London session, I haven't had a single profitable trade. Not a single one. Cool. I don't care. I'm up 61%. Well, now 59% for this month. So
Order filled.
Right? Next trade is going to come. Next opportunity is going to come. We're playing this for the long-term game. We're not playing this for today. We're not playing it for tomorrow. This is a long-term thing that you're playing. And if you look at trading as I need to make money today, you're going to struggle big time. Mr. T, my limit entry is 725. Yeah, that's the thing. It could go down to 725, tap into that fair value gap, and then move, right? And your entry would be much nicer than mine. But personally, I just hate when I set a limit order and then it misses my entry and goes, which is what it might be doing right now. It missed you at 725 and is now pushing up. So I'm just a market order guy. Sometimes I set limits if my stop would be too large, but market order is my thing. Let's see. Yeah, Leia, that would be too long. That's more like a Merriam line there, a rap battle Merriam line. Ding, ding, carry bling, let the markets do their thing. Am I using CRT for entries? What is CRT? Candle range theory? Is that candle range theory? I think it's pretty similar to TTFM. So I'm using the fractal model for my entries. T-Trade's fractal model. Yeah, 22. My trade in London yesterday almost played out. Actually, I could have moved break even. Like, let's analyze this really quick. It was a dirty one. Okay. Here's why. Here's why. So basically, I entered the trade. When did I enter it? I think. Oh yeah, here. Once we get a change in state of delivery. Pretty much at 10, yeah, that was the trade. So basically I entered the trade here, right? I set a 2-to-1 on this. Had a 29 point stop, and I targeted the candle body high of the Nvidia candle. It was something along the lines of this. And I even said during the stream yesterday, once we reach this level here, 36.52, that's why it's still marked here in the chart. I said, once we reach this level and react heavily to it, move break even. And you know what? I didn't do it. I was like, nah, I gotta let this play out. And that was so stupid. Ultimately, I ended up closing it once we got a change in state of delivery here, right? So I had my close pretty much here for 17 points, or like 20, 21 something points. But this was up like 31 points, and I could have moved my stop to this level that I mentioned once we broke through it, or at least trail break even. That was a mistake, a management mistake from my end. All right, let's see if we get your 725 entry here. I hope for you that we get it and then we push up. That would be nice.
Order filled.
Cholan, missed your entry by 1 tick. Well, that happens. It's okay. Entered long at 736.5. Uh-oh. You got top ticked for now. Top ticked for now. Yeah, bro. Took out half the position to pay myself and left the rest at break even. Wasn't a bad trade. Yeah, nice. 22. That was definitely the smarter move in hindsight. Obviously, while it happens, you never know. Right. But I should have moved at least break even, especially because I mentioned it during the London stream and said, hey, at this level, move break even. All right, Mr. T is in that trade now as well. Great entry for you now. So that means your trade is more looking something like this. So you get a nice 2-to-1. Great entry. Good morning, Elma Jauri. Elma Jauri? Is that how I pronounce it? Oh, you just lost money. Need $3 for payout, but ended just losing 800. When? When did you lose 800? Like right now, or when? Gold now correcting itself, moving further down as we expected. Let's see. No, little sack. Your TP was 737.50. Damn it. Well, you might still get it. I'm still in this for the longs. Ideally for me, we would now reject this, move higher, close through this, and then I could move my stop here to like the 722s. That would be my dream case right now. Oh, how did you lose $800 right now? What was the size you traded? And not judging, like I'm curious, really curious. How did you just lose $800? Like, how many contracts did you trade? Especially if you only needed 3. Not judging again, I'm curious, really curious. Trader guy, I'm thinking we bounce around the London range and make a move in New York. This month has been hard for me. Yeah, dude, I mean, could be. We never know. What even is this? Alright, I do think we're gonna go back to Asia highs though. If we don't go back to Asia highs during London, like... What even is this? Nikohan, you're trading the fractal using 4 hour, 50 minute, 1 minute. That's funny, Because I'm using the 1 hour, 5 minute, 30 minute, 3 minute. I'm literally using every single time frame you're not using, and vice versa. That's funny. No, oh, that's sad, man. Revenge trading is never fun. Did you blow your account, or do you still have your account and you're just down $800? Because if you still have your account, then protect it at all costs, right? Stop trading for today. Even like ideally, even walk away from this stream. Don't get tempted. Like just walk away. Protect your capital if you still have money in that account. We're at 115 likes, guys. 85 more to 200. That would be nice. Very, very nice. Oh, the stretches today are hitting. But yeah, still very, very low volume here, unfortunately. But honestly, if I were you, I would walk away now. Projection and then push up. Don't even watch the stream. You're gonna get tempted. If not, this is most likely gonna take us out. I appreciate you being here, but walk away. Because I know how hard this is mentally. Then it did like twice as 30. If you're very, very close to payout, and then you lose big, it's so annoying. Come back on Monday, refresh over the weekend, then come back. Ian, you need $800 more to hit the goal. Today's the last day. Nice. Do it. But don't stress it, right? It's London session now. We still have the entire day. We have New York session later to trade, so don't stress it. If you don't see a setup, don't take it. Mr. T, you're praying, so no questions as of now. Keep praying. It's gonna work. Hopefully. Or that 22, that's a great idea. Put the stream on the TV and log out of everything so you can't trade. I actually set up the music now so I can hear it myself, not just you guys. Because during the New York stream we can't hear it, it's just you guys. But now at London I can hear it too. I'm digging it. Jamming to it. Let's see what the others are doing while this NQ trade is playing. Yeah, ES is a bit weak right now. Gold is pushing down as we expected. Took out previous day high, moving lower. Not just following that trend, right? Lower low, lower high, lower low. Well, that wasn't a lower low, but lower high, lower low, lower high, lower low. Higher high, but lower low, lower high, lower low. So we're moving down on gold. We need that push on NQ now. Back to the 27s. I said target is Asia high on this, and I always set my target like a little bit lower than Asia high. Like whenever I have a target, I set it lower than the actual target. So for example, if I would target previous day high here, myself, I would set my target here at candle body high. It's about three points lower. I just, from experience, this just hits more often than the actual target. And I don't really care, it's 3 points more or less. Alright, let me go through the chat. Josh, why trading London session? Because it's fucking awesome. I like the London session. I like slow moving markets. Don't have anything against it. This is very slow right now. But yesterday we got a nice move. First London stream on Tuesday, we got an extremely nice move. VDM asking, Nick, how do you personally manage an intraday drawdown account? Intraday drawdown accounts until, let's say, for example, the advanced account, Tradify advanced account, I take base hits until I'm out of drawdown, right? Out of the trailing drawdown. So for example, let's say I'm on a 50k advanced account, I would only go for 10-point trades. I would enter trade 10 points, set my TP there, right? I wouldn't trail my stop, just TP 10 points, max 15 points, take a win, look for the next setup, take a win, look for the next setup. The danger if you do that is, or for me at least, I tend to enter too many trades, right? I tend to go into setups and be like, oh, I'm only looking for 10 points. It doesn't need to be a perfect setup, and that's when I fuck it up. If I instead look for A+ setups and only go for 10 points, then it works really, really well. So that's how I manage it until I'm out of trailing drawdown. Once I'm out of trailing drawdown, then obviously I trade as usual. JT, am I from the US? No, I'm from Switzerland. 6K82, taking this on micro, started with 5 and added 2 more. Gonna scale out as we go higher. All right, if that works for you. I don't like to scale in and don't like to scale out. I just like to go for full TPs. However, if I trade more than 1 mini, if I trade like 2-3 minis, I would take partials. Depending on the scenario. Second leg up, Tony. Yeah, I hope so. We need that second leg up. Otherwise, I'm getting stopped out of this trade twice. Next bar trader, do I use the auto bias and tease indicator? Yes.
Order filled.
Just to figure out what it says, right? But then oftentimes, I mean, he's going for huge trades, sometimes like 150, 200 points. I'm more the 25 to 50 point trader. So the bias doesn't really matter, honestly. You can get 25 to 50 points in all directions, honestly.
Order filled.
But let's see what the bias actually says for today. I haven't checked. Bias says... Yeah, bias says don't even trade today, right? Is there a C2 here?
Order filled.
But I like to set it to neutral and just see the setups that way. Works the best for me. Yeah, Leia. We actually have the bot for the giveaways. We just haven't set it up for my stream yet. We're gonna do that though, so I don't have to do random old school scrolling. Next week we're gonna have the bot, pretty sure. Carrie saying, bro is an ICT trader now. Yeah, apparently. I'm still trading momentum and breakouts, but there is no momentum right now. James Misser, for a 50k funded account, what size of contracts on NQ or MNQ do I recommend? It doesn't matter which account it is, it's just per drawdown. So basically, per $500 of drawdown that you have, trade 1 micro. That is very, very safe. So for example, if you have $2,000 drawdown, trade 4 micros. If you have $20,000 drawdown, trade 40 micros. 4 minis. Tim says, pump. Yeah, please, man. We need that pump. Otherwise, we're gonna get stopped out of this. Ursula, can Tradify perhaps consider giving free resets? I unfortunately don't make that decision. I just give you whatever I can give you based on what the team tells me I can give you. We did free resets in the past, but we prefer to just give away free accounts because then you get a fresh new account. Don't have to reset your old one. All right, oil moving lower here. It's actually a nice fractal model setup. Gold moving a bit lower, but struggling at the 3466s. Leia, what's your natural gas trade doing? You still in it? Ugh, yikes. As Miriam would say, not cute. Not cute, such as the NQ trade that we're in. Yeah, oil is not looking too bad, honestly. All right, let me check the chat. Yeah, I like it too, Tim, that ES took the low, but we need to move back up now. We can't just take the low and continue. Shaki, can I repeat what? I'm saying so. I'm talking so much I can't remember what I said. James, thank you, but isn't 4 micros putting it all at once on the line? No. What do you mean? Like, let's say I was in this trade with 4 micros, right? My stop loss is 22 points. 22 times 4 micros is 8. 22 times 8 would be $176. How would $176 be putting this all on the line? On a $2,000 drawdown. Leia, I am pushing down very slowly. I
Order
hope that we can
filled.
push faster, but natural gas doesn't seem to have volume right now, such as all the other assets. Literally nothing is moving right now. Yeah, Gary, I'm with you. Not really getting the moves here. Not really getting the moves. Yeah, I'm gonna close out this trade. Here's why. Based on the 3-minute, 30-minute, we now have fractal model to the downside. We never had that candle too close. So I'm looking more for shorts now, actually. NQ did is 30 twice. Yeah, we're gonna go down as far as it looks. Could we enter a fractal short here on NQ? Yes, we could. But ES looks better for shorts, not gonna lie. But that entry is already gone. Entry would have been here, 6, 5, 10. So we would need to work with NQ. I mean, what would be? Let's look at the options here. If we enter on NQ for shorts, right? We would need to set our stop. We would need to set our stop above the current swing high. So let's say we would enter here, right? We have our stop above the high, and then target a 2-to-1 ideally. If we can target a 2-to-1, that would be, yeah, that would be a realistic target actually. Interesting, I might consider taking that short. Do we have a change in state of delivery? Yes, we do, after this candle closes. So once this candle closes, we're gonna have a confirmed setup for a short. If it closes below here, right? Now this is why it's so important for you to be able to flip bias. I mean, I took 2 longs, but the longs weren't working out. So now I'm looking for shorts based on not just I took 2 longs and it didn't work out, I'm looking for shorts, but based on, oh, I missed that we didn't have a candle 2 closure here that was bullish. Or we did, but it was also taken out the highs and had huge selling pressure right after. So now I'm looking for sells because it makes more sense. All right, what else we got? I'm not in this trade yet, by the way, guys. Not in this trade, although we did close. Okay, we did have the fractal close. I might take it. Yeah, and ES pump pushes further, so I'm gonna take the sell here. Yeah, of course it had to fill me down here. Come on. Come on. What are you doing? All right. So realistic target, let's see, would be this right here at like 675. That's doable. That would be a 39 point move, 1.67 RR. Let's play that. If that doesn't work out, I'm done at that point. But it's not looking too bad, honestly. Yes, let's see. Yes, the next level will be the same here at 6504.50. About here. Just gonna mark this red. So I don't miss it. Same on
Order filled.
and Q with this level here. And we're gonna go out before that if we come back, if we come down there. All right. Let's let this play out. ES is moving down nicely. Now we need NQ to follow. Gary, you have multiple setups tonight. None of them have panned out. Happens. Part of trading. Next bar trader. If I check the 15 to 4 hour, it's bearish already. Let me check. Damn, these candles are large. Yeah, true. We had a candle 3 close, but also, oh wait, that's my dumbass just pulled up the wrong chart.
Order filled.
Yeah, true. True. I missed that, honestly, and that happens.
Order
right?
filled.
Especially when I'm focused on streaming. I'm still making mistakes that I wouldn't make when I'm not streaming, but that's fine. I'm glad you guys make me aware of them. Looks like rotation London session. Yeah, it does, Christopher. I'm with you. Ali's saying
Order
my mic
filled.
volume is very low. Well, everybody says they can hear me well, so I don't know. If this trade would hit, it would make up for these 2 previous losses and some. So we could finally pull up the money gun. That would be nice. Carrie says we're gonna fill the 4 hour fair value gap. Which one? Which one are you talking about? Can't see one. Am I blind? Give me the levels so I can check. Please. All right. Too smooth. What's good, TTV fam? Good to have you here, man. Long actually bounced at VWAP. Maybe I should put the VWAP bounce into my toolbox for base hits during London session. Yeah, I mean, sometimes it does bounce from VWAP, right? Somebody even asked me before I took the trade, are you considering VWAP? I said no. Well, should have, apparently. But sometimes it just breaks through. I just tried to catch the bottom here for the session, but it seems like we're just trending to the downside now. That's why it changed to shorts.
Order filled.
JS, I am looking at the fractal on the 4 hour and daily. However, my main focus is on the 5 minute and 1 hour. Little Zax 25. I actually let the Tradify team know that we need some Tradify branded money guns, and I think they're up for it. So let's see. I think that might come in the future. Wouldn't that be sick? That would be so sick. By the way, guys, if you haven't already, smash that like button really quick, because if we hit 200 likes today, we're gonna go and do We're gonna do a 50K growth account giveaway. Chucky says my screen is quite blurry. Is that so? Is that so? So my TP is 23,675. 23,675. Yeah, just make sure you're always watching at highest quality possible on YouTube, because you should be able to see my screen. Gary says one of the plays I like to do is watch VWAP. Where does price tend to hang out through the session so far, above or below? If price crosses VWAP, start looking for weakness. Yeah, that's an opportunity, or like a possibility to look at it. Yeah, branded money gun, Peter. We need it. Pro Bitcoin, what is VWAP actually? It's volume weighted average price. Volume weighted average price. If you need the exact definition and how it's calculated, I would suggest going ChatGPT. Let's actually see what ChatGPT says about this. Shall we? Shall we, shall we? Let's see. What is VWAP in trading? So as I said, volume weighted average price. It's a popular indicator in trading that shows the average price of an asset throughout the day, weighted by volume. What it tells you, VWAP gives a more accurate picture of an asset's average price than just a simple average, because it considers how much volume was traded at each price level. So the formula is the sum of price times volume divided by the sum of volume over a specific time period. How traders use VWAP? Well, we know that. But yeah, there's your definition. I'm gonna be careful once VWAP reaches this 6504 50 level, 75 level. If it reverses from that, it could mean that NQ reverses as well. IV, when Project X?
Order filled.
Favorite question of you guys, huh? I have no specific information about that. I just heard it's gonna be soon. VWAP rejection already. Asia close as well as known on the London Open. MES bear. Short from 721. Yeah, 721 was a nice short entry. Simple 700 should react. Latest 687. Don't be too greedy for London TPs. Yeah, I mean London TPs I can often hit anywhere between 25 and 50 points. So 39 is well within range. Ravel, is anyone else here attending the London Tradify meetup? Me! I'm gonna be there. I'm gonna fly to London. I'm gonna be there. So cool, like to see you guys in the chat having so many different strategies and they seem to work for you. Great. Like there's so many different ways you can go about trading and so many strategies you can use and so many work. So very different ways to look at the market. Okay, gold consolidating and oil consolidating. Glad I'm not in those. Let's see. What else we got in the chat? Pushing down now, up 10 points currently. Having a clean eye on ES. I'm gonna pull up just the 2 chart view so I can focus on NQ and ES. Don't want to miss anything. We don't want to miss anything. All right. Kev says I actually always have NQ and ES VWAP on my charts, as it potentially gives a small bump on both assets once one hits it. Not a guarantee, but watching it giving a reaction could give a base hit. Yep, true. It's a strategy. Let's see. Trader guy, that's a pretty big stop, but if it works for you, that's good. Raveles, I've been loving T-Trade's model. The fractal model is freaking fantastic. Absolutely love it. Ian up 10 points and 2 micros. Nice. Oh, 2 minis. Nice. That's what we like. Vish, just wanted to say great energy, man, especially at this hour. Thank you. Appreciate it. Well, for me, it's a normal hour. It's 9:44 a.m. So I'm chilling at that time. I need to start putting this on screen, what indicator this is. This question pops up all the time. All right, so for all you guys asking, TTFM, T-Trades, oh, nice. Right in a white font on a white chart. See, that's the downside of white charts. T-Trades, fractal model, paid indicator. That's what this is. Can I make this smaller?
Order filled.
Yeah. Oh, well, that's too small. 16 maybe. There we go. All right, Little Sax 25. How long did it take you to understand the fractal model? It took me to fully understand it about a week. But that week was literally every single day, hours and hours and hours and hours of learning. First day I spent learning it, I spent like 6 hours just going through the model, through the course multiple times. Writing everything down that I learned. All right, so now we got to be careful because ES is reaching into that level, right? The 50450s. So if we break this, I'm very confident we're going to hit on NQ. But here's the thing: if we reject this level on ES and we move up,
order filled,
aggressively, we could see the same move on NQ. So I'm just having a close eye on that. If you're in this short with me, pay close attention to what's happening right now. We're breaking it. Let's see if we reject it or break through it. I mean, the next level after that to take a close look at is ES 6502.25. So let's see if we can get it. Gotta be patient and hold this. We're reacting a bit to it, which is expected, right? I just don't want to see an aggressive push up from here. If we see an aggressive push up from here, I'm gonna close out the trade. Do I see a difference in the fractal model on London versus New York? Yes. New York moves way slower. But the model, no. Model stays the same. Hey, oh, great job, man. I mean, you were $3 away from payout. You lost $800, which sucks. You walked away. You just came back to sit but not trading. That's a big win. That's really a big win. Discipline in trading is everything. Just make sure you keep TradeAway closed. You keep your platform closed for the rest of the day and you're not trading at all anymore. Rest on the weekend, reset, and then come back fresh on Monday. Because worst thing would be to blow the account today and then the entire weekend you're gonna be like, why did I do it? And that would be so bad. All right, it seems like we will push through this level so far. Not reacting too much to it. 22, you got your stop at 1 point in profit. Nice. It's also at the 700 level, which is the psychological level. Always the hundreds. Oh, I just realized I haven't even set my TP and I haven't even set my stop loss. I just marked it on trading view. Nice. There we go. I would really like to see a further push down. Let's see. We're looking good so far. Tim says here comes the move up. Let's see. Let's see. Andy, I learned the T-Trades model from his Market Lens course. The Market Lens. Stima, you took 3 minis off and you're still in 2 minis? That's some big boy size there. 5 minis.
Order filled.
Andy, yeah, he has a course on WAP actually. But you get the Discord with it as well. Yeah, Gary, that's true. That's really nice about Project X, that you can set a lockout rule and then you cannot enter it again. I like that feature too. Trader King LFT, is Sunday another MES session? Yes, absolutely. MES will be on backtesting every Sunday from now on. You can always see the scheduled streams on our channel here on YouTube. $22, why do the hundreds act as a psychological level?
Order filled.
Honestly, it's just from experience. I see hundreds very, very often reject. Hey, what's up, Joker? Good morning. I'll call you after this stream. You're handsome too. Well, Meishu, lockout rule sounds like TopStep X. That's because Project X is the platform that TopStep X is running on. Little Zax 25. No, Monday we're not going to have a London session. We're not going to have a New York session either, because it's Labor Day in the US. So volume will be extremely low. Is market even half day open? Not sure. Let's check. Just gonna pull this up here so you can see. Labor Day, Labor Day. Monday. Seems like it's fully closed. But yeah, we're not gonna have any streams. Yeah, thanks, Joker. This one is nice that we're in right now. Previous two got me stopped. Gary says Monday is a half day. Yeah, but volume will just be low. Mandy, when do you look to move your stop loss? I always get confused as to when is the right time to move it. Look, here's the thing. I'm marking out important levels for NQ, this one that I'm targeting basically. But I also look at ES at the same time because they move usually in congruence, right? They move the same way. ES is at an important level right now. If we would bounce from this level, like hard, I would move my stop loss. But right now, since we're not doing that, I'm fine with just holding this. Next level on ES that we look at is 6502. We're up 20 points on NQ right now. Magnus, am I green on the day right now? I think I'm slightly red because of the two losses. But if this trade hits, we're green on the day. Rasmus, yeah, Tradify does have consistency rules. If you want to get the details on that, you have to go to the website, tradify.co, and we have an amazing FAQ section that will tell you all about it. Gary, don't touch half days. Yeah, half days usually not that great. If I see a great setup, I still trade, but... Trader guy, got out at 696, might regret it, but have a bad headache. Sorry to hear that, man. Hope you get better soon. The headache gets better soon. I mean, you still took profit, right? Might be that we go further down, but if you don't feel well, just go rest. Go recover. Makes more sense. Andy, you just booked your hotel and travel for the London meetup? Let's go, man. Looking forward to meet you there. It's gonna be nice. Ian, 20 points, 2 minis. Nice. It's $800. We like it. Magnus, is a point the same as handle? Yeah, Matt calls it handles. I call it points, because it's points. Dude, at this time, you can't ask that anymore. Which indicator are you using for higher time frame candles? It literally says it there. I wrote it on the chart, because someone you were asking. Let's see. Can we get the final push to TP? ES looking weak. And Q following, so we're good for now. Nice, Gary. Entered with 3 minis at 23,719. That's a W. Let's go. All right, guys, as a reminder, we're going to do a giveaway here for a 50K growth account once we reach 200 likes. So if you haven't already, we're 237 people in here. We could definitely do that. If you haven't already, smash the like button. The actual like button, not the heart in the chat, but the actual like button below the video, so we can get to 200 likes. Because if we hit 200 likes, we're going to give away a 50K growth account here. But we need to hit 200. Hey, Kissmaz, good morning. Hashtag NickTV. I'm tuning in from holiday in Greece. Where's your favorite holiday destination? Hey, enjoy your holiday first of all. Enjoy the nice weather, I'm assuming there is in Greece. My favorite holiday destination, honestly, the Maldives. I love the Maldives, so beautiful. I was there twice, looking to go again in the next couple months. So nice. Magnus, is Tradify available in the European countries? Yes, absolutely it is.
Order
a list
filled
on the Tradify website that shows you what countries can trade and what can't, but in Europe you should be fine. Bradley in a sell position from 713. You almost got the same entry as me. I got 714.25. Hustle quotes. I'm out at break even. All right. Break even for the day, I'm assuming. Rasmus, what do you consider an average stop loss? I mean, for me, an average stop loss is like 20 points. Christopher, used to trade ICT, but moved to more volume profile and CBD usage. But yesterday, when I looked at the chart after my session, I saw many ICT stuff. Yeah, I think once you see it, you can't unsee it. It's just how it is. Gamershop, how do you find key levels? For me, key levels are levels where we see price bounce or reject very, very hard, right? So for example, yesterday, here at 11:30 a.m. Eastern time, this level where we came down to, right, 672, and then bounced very hard off from, retested it again, and then pushed up and made new highs. That to me is a very strong level. Same as with this one right here. Same as with this one right here. I usually don't go for the wicks. I go for the candle bodies. Because wicks do the damage. Bodies tell the story. Let's see if we get TP on this trade. Yeah, still pushing lower. So I like it. Hey love, my girlfriend is in the chat. She says she likes my plant. I like it too. I stole it from the living room. Next TP1 mini here at 687. Yeah, I don't hate it. Don't hate it. Gary says I hate ICT. All right, man. I don't like the person either, but I like the concept. ICT is a big bag of all trading styles, all put together. So yeah, it's everywhere. Yeah, definitely. Oh, Nick, I have a friend asking if Tradify allows VPN. He is in the US, but don't have the necessary documents to register, so he plans to use documents from his home country. I told him to email support. Yep, you did the right thing. Email support, because I have no idea. Trading guy gives you the broker account. Funny. Satoshi Stacker, is it a fake plant? No, it's not a fake plant. It's a real plant. If I was vegan, I would probably eat it. The demon, what? Is that an ICT quote? Don't tell me. That guy seems to claim everything as his. I don't know, man. I don't know where I picked it up. ES pushing lower. 10 a.m. is coming up. Should be with volume, so we either get the push or we reverse, which means at this point I'm just gonna move break even. So worst case, we make 1 point on this trade. Best case, we hit TP. Hey love, if you're still in the chat, look at Tom's question. He's asking you, what does a profitable trader smell like? Nick looks like he smells of vanilla, musk, and money. You gotta answer him now. No, Steamai, I was actually at dinner with my girlfriend and her family, so I didn't watch Nick S's long. I thought he was looking for shorts.
Order filled.
Yeah, Gary, I mean, look, if it didn't work for you, then it makes sense that you don't trade it. That makes very much sense. So we're approaching TP here. Let's see if we can pull out the money gun for this London session. That would be nice. Getting close. Getting close to TP. Obviously, we expect some heavier move here at 10 my time, which is 9 a.m. UK time. Can we hit TP and get the money gun? Also, did we hit 200 likes for the giveaway? We're at 168. Guys, come on. We got to get 32 more likes. You hit that like button because the London session stream would end right now. So you have to like the stream right now in order for me to stay on and do that giveaway. All right, we're rejecting this level here on ES.
Order filled.
If you're rejecting it and we're disrespect this fair value gap, I'm going to close the trade. Would I have preferred this these 3 points lower to hit my TP? Yes, absolutely. But market doesn't give a shit about me. Market does what market does. Yeah, we rejected this. Well, let's see. We might still get it. We might still get it. Where are you from? I'm from Switzerland. If we hit TP, we like, dude. I'm gonna do a giveaway if you like. So. Yeah, Jeremy. I know this might be turning here. That's why I say if we reject this now and we close bullish on the 5 minute, I'm gonna close the trade. But if we don't, then I'm just gonna move my stop above the 5 minute candle. VDM, is the intraday drawdown resetting to $2,000 on a 50k advance account if the day is closed in green? No. The trailing drawdown trails. So if you're up, let's say $1,000 and you lose 500 by the end of the day, the next day you would only have $1,500 in drawdown. Leia, you're still leaving your trade? Nice. Yeah, I mean, just walk away. I should put up the Swiss flag. All right, did we hit the like goal? 198, come on, 2 more likes and we're gonna do a giveaway. I'm already doing overtime here for you guys because I want to do that giveaway. I could just walk away and say, hey, you didn't hit the goal, but I want you guys to get a free 50k growth account. 199, 1 more like. Somebody who hasn't liked yet, who would like to like? $203. All right, let's go. Nice. Since we want this trade to move down and hit TP, here's how you participate in this giveaway. You have to like the stream, you have to subscribe to the channel, and I will drop a keyword here in a second. You have to type that keyword in the chat, but only once. If you type it more than once and we catch you, you're gonna get disqualified. So the keyword is a dampit with an A, D-A-M-P-I-T, 1 word, no space, because we want the market to dump. Okay, once this candle closes, I'm gonna move my stop above this candle. Dampit. with an A. Again, we're gonna pick a random winner for a 50k growth account.
Order filled.
And if we hit TP here, gonna pull out the money gun. Well, even if we don't hit TP, but we close out green. We pull out the money gun. But ES is still pushing down, so I'm kinda liking this. I'm kinda liking this. We're approaching TP now. While you're saying dump it, guys, you are dumping the market. Tradify TV.
Order filled.
London stream, dumping the market. That's what we like. I'm gonna move my my stop above this candle now. So we're making money either way. Oh my god, look at this. We did hit it, but I didn't get filled. Like what? What? We did hit it, but I didn't get filled. Are you freaking kidding me? Guys, what? We hit it, I didn't get... What? The hell? What is market doing? Look, it's even filled on the visual P&L here. We're gonna get it though. I'm still holding it. The hell? Yeah, Joker. Police. Dubai police. Alright, we got it now. Nice. Nice, nice, nice. You know what that means, guys. We just got a 39-point target. So, money gone.
Order filled.
Let's go. Congrats everybody who took this with me. We're green on the day. Green on the day. That's what we like. 39 points during London stream is a very, very nice trade. So appreciate you all holding this with me and saying dump it. All right, now let's actually get to that giveaway. I'm gonna go back to the screen here, but giveaway. I'm just gonna close my eyes and randomly scroll. There we go. Scroll, scroll, scroll. Up, 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 up. Down, 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 down. Up, up, down, down. Up, down, up, down. And the giveaway winner is Pulsar. Pulsar. Let me just check if you typed more than once. I hope not. Pulsar. Nope. Only typed once. Congrats, Pulsar. You just won a 50k growth account, but you got to type something in the chat really quick. Says hey. Well, at least not a hello. But yeah, you just won a 50k growth account. So congratulations. You just got free money, basically. Please make sure to add your email address to your YouTube channel description so we can reach out to you and send you your free account. But congrats, that was fun. Just gonna let background Nick know so he sends you your account. All right, all right, all right, all right. Guys, that's it. That's a wrap for another Tradify TV London session stream. We're up. I hope everybody took that trade with me. 39 points. That was a nice green. It was fun having you here as usual. I'm looking forward to the next stream, which is going to be obviously the New York stream today at 8:30 a.m. Eastern time. And then the next stream after that is going to be backtesting with a MES on Sunday. And then Monday we will not have any streams, so no London stream, no New York stream. I will be back with the London session on Tuesday, 7:45 a.m. London time. So thank you all for tuning in. Looking forward to see you in the New York session, and I wish you all an amazing day.
Order filled. Order filled. Order filled.
On the Fed, though he does seem quite set on reshaping the Fed in a way that he feels might be more conducive for his views about where he wants interest rates to be, and that's obviously lower. And does he continue to pressure the Fed to do so? Does he try and get more of his own appointees onto the Fed?
Yeah.
And those appointees then would be on the Fed for years. So could we see a longer-term trajectory here? But you are seeing potentially fundamental questions about the future of the Fed and its ability to set policy.
Yeah, not that dissimilar to stacking the courts as well with the Supreme Court. Bloomberg's Rosalind Matheson. Also, for any viewers watching, the full article is up. Our big take today, Trump's attacks risk wrecking the Fed's hard-won credibility. That is up on your screens right now if you want to read the full article. All right, Chinese President Xi Jinping's closest international allies, including the leaders of Russia and India, will be gathering this weekend for China's biggest diplomatic event of the year. The Shanghai Cooperation Organization Leaders Summit will be followed next week by a military parade in Beijing with guests including Vladimir Putin and North Korean leader Kim Jong-un. Bloomberg senior executive editor John Liu joins us from the Chinese capital. John, good to have you with us. It's quite the guest list for the summit this weekend. I also noticed the Iranian president, Pezeshkian, is going to be there as well. What are we expecting out of this summit?
Well, I think we should expect to see lots of smiling faces, lots of handshakes, lots of effort to show that these are nations, these are heads of state that are here to support one another, that these are friends. I think we will also hear lots of talk about the right of developing countries, the global south, to choose their own economic models, to choose their own forms of government. You will hear they have the right to buy energy from who they want. And I think you will hear a lot
Order
of
filled.
bristling and complaining about American tariffs, American sanctions, American projections of military power. And you will hear lots of talk about how everyone at this meeting is on the same page. And while many of them have very similar interests, I think it's also important to note that some of these countries have very important differences as well. So, for example, India and Pakistan will both be at the SCO summit this weekend, and they are, very, very long rivals. Even India and China, where you see this warming of the relationship, that is really just an attempt to move the relationship from outright confrontation to normalcy.
Yeah, I noted that it was a RIC summit, not a BRIC summit, because you've got Russia, India, China, but no Brazil there. What do you think the messaging is going to be from those three countries in particular to President Trump?
Well, I think, Mr. Putin has a very clear interest. These are his two biggest customers when it comes to energy, China and India, and he wants to make sure that they will continue to be his customers. They will not back down to American pressure, and they will continue to buy Russian oil and gas and fund Russia's war effort. You also have President Erdogan from Turkey at the SCO. So Turkey is the third biggest buyer of Russian oil. And so that I think will be very important. And I think it'll be important for President Xi and Prime Minister Modi to show that they are standing up, even whatever President Trump is saying, they are making the best decisions for their people and their countries. And I think that will be the message they want projected to the global audience.
Yeah. Well, Bloomberg senior executive editor John Liu in Beijing. And obviously, speaking of energy critical, we're going to be talking more about that in the next segment as U.S. investments in clean energy plunge. We'll explore what that means for the energy transition. That's next. This is Bloomberg.
up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hardern in Alberta, Canada, and this is Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Global investment for new renewable energy development reached a record $386 billion during the first half of the year. That is up 10% from the previous year. The data comes from a report by Bloomberg NEF, which also shows committed spending in the U.S. has dropped 36% in the same period. Meanwhile, Goldman Sachs is forecasting a $620 billion reduction in U.S. government spending on green energy by the end of 2032. We're joined now by Michele Della Vigna, head of EMEA Natural Resources Research at Goldman Sachs. Good to have you with us. Some really big themes to discuss here. Maybe let's just start with some of the takeaways from that report. And maybe my first question should be about how the change in the U.S. administration, Trump administration's approach to clean energy initiatives is affecting the landscape for renewables. And one of the big stories, of course, over the last couple of days has been Trump also looking to close some of those offshore wind farms. So how is this all reverberating in the renewables landscape?
I think the U.S. energy revolution continues at full pace. On one side, there's no doubt that hydrocarbon demand keeps growing, especially for natural gas, which is a big winner in the U.S. But I also think we shouldn't underestimate the renewable growth. That effectively the incentives have been extended all the way to 2030. So solar will continue to grow. Onshore wind will continue to grow. Batteries for grid and grid investment will continue to grow. The only exception is offshore wind, which, to be fair, is so high on the cost curve of the US power generation that it probably makes economic sense for the moment to set it aside. But the revolution in renewables in the US continues, and so does shale. And that is what I think remains one of the key competitive advantages of the US economy.
Well, one of the arguments that I've heard against that is that it's difficult to keep scaling and building up businesses without the right incentives in place. And if your business model is solely reliant on having those credits or those incentives, then the second that they're removed, it becomes non-viable. What's your response to that?
I think that's a very fair comment, but the solar incentives have been extended for every project that starts production in the next year and comes on stream by 2030. So I actually think we have the visibility over pretty much 5 years for these investments. And after that, if the cost improvement continues in solar, many of these projects may be economic even without the incentives. The key is to have the demand, and the demand is there, driven by AI and by industrial growth and reshoring of industry in the US. And I think together with gas to guarantee the seasonality and intermittency and also industrial scale storage, I think actually the US power system is going to be one of the most exciting investment opportunity in the coming decade.
Okay, let's talk about energy demand. The other big, I would say, market event this week was NVIDIA results. And one of the really interesting things that came from the earnings call was the CEO talking about trillions of dollars of AI infrastructure spend over the next decade. How is that going to translate to future energy demand? And where are those incremental sources of energy going to come from to power up all these data centers?
Mm-hmm. Good question. We've got US demand that for a decade was flat. That is going back to a growth of about 2% per annum, out of which between 1/3 and half will be driven by data centers and artificial intelligence. This is an extraordinary change. Where does this new power come from? Clearly, it will come from renewables, mostly solar, but that's intermittent. Then it will need to be balanced with more investment in the grid, digitalization of the grid. It will need to come with storage, so grid-scale batteries, with more gas-fired power generation. And we go back to the structural gas growth story we are going to see pretty much for the next 2-3 decades. And finally, nuclear. There will be a big revival of nuclear. Nuclear is a key technology that can guarantee and underpin this demand growth with grid reliability.
That was going to be my next question. I wanted to ask you about nuclear because I feel like there has been a bit of resurgence of interest. And I'm here in Dubai, and I know that in the UAE they're investing a lot in nuclear infrastructure to help power some of those data centers. But do you think these nuclear facilities can be built up in time? It takes a lot of time, and they're very expensive, very costly to get up and running.
It will not be built up in time, so it will take about a decade for the new nuclear plants to really be up and running in large scale. That's why, in the meantime, gas and solar And to be fair, a longer life for coal will be absolutely necessary to fuel the growth. But longer term, to start to invest in nuclear now is absolutely key. And there's also a new emerging technology that is starting to get good funding, which is fusion, which again will not be ready before 2030, but could become an important part of the solution as we start to look at the next decade. In energy, you always need to plan early. Yes, we need a solution for the next 5 years, but we also need to think about the power mix in the 2030s. And nuclear for sure, and fusion most likely will be an important part of it. As the UAE shows, that is always one of the most advanced countries in terms of thinking about the energy system.
Yeah, I'm sure they would love to hear that. Let me just round up by asking about, obviously, you know, the hydrocarbon percentage of the overall power mix. It's something like 80% still today. How do you see that evolving over the next decade?
The percentage of hydrocarbons will start to decline because without any doubt, solar especially will take market share, and longer term, I think nuclear may also gain market share, but it will remain a very important part of the mix, and in absolute, it will grow. So we see a growing role, especially for natural gas, and although we see coal retirement, we think the coal retirements are going to be much slower than anything we have witnessed over the last 5 years.
Yeah, so interesting. Well, perhaps a point of optimism, especially your outlook vis-a-vis the renewables opportunity set still in the U.S. Michele Della Vigna, head of EMEA Natural Resources Research from Goldman Sachs, thank you so much for joining us. And let's just do a quick recap of how some of these European markets are faring today. We are slipping a little bit in trading. As you can see, Stock 600 down about 0.5%. The DAX also down 0.5%. Keeping a close eye on the inflation data as it comes due. We've already had Spain and France, which have surprised to the downside, and some of the regional numbers from Germany are pouring through. Keep an eye out on that 1 p.m. CPI print for Germany as a whole. Speaking of Germany, coming up, German Chancellor Friedrich Merz says a meeting between Zelensky and Putin is unlikely to materialize. More next. This is Bloomberg.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
Good morning and welcome to The Pulse. I'm Joanna Bersecci in Dubai, and these are your top stories. Stocks slip after another Wall Street record as traders count down to today's key U.S. inflation data. Fed Governor Chris Waller restates his call for lower interest rates. Lisa Cook sues to block President Trump's attempts to fire her from the Fed. Her lawyers say the alleged mortgage fraud was an unintentional clerical error. And here in Europe, French and Spanish inflation undershoot estimates, but data suggests euro area price growth will not deviate much from the ECB's 2% target. And German Chancellor Friedrich Merz says a meeting between Ukrainian President Volodymyr Zelensky and Russia's Vladimir Putin is unlikely to materialize, despite it being touted by the U.S. President Donald Trump. Now, the White House had previously said Putin agreed to a meeting, but the Kremlin never confirmed their commitments. Joining me now is Bloomberg's Greg Sullivan. So what do we read into Merz's comments? How likely is it really that Putin and Zelensky meet?
Well, on one hand, these comments are not really that surprising. We know that Ukrainian President Volodymyr Zelensky has called for a meeting with his Russian counterpart to try to work out a peace agreement. We also know that President Trump has backed that idea and called for it as well. But so far, Putin has largely just ignored those calls. The Kremlin has shown little interest or little intent to actually meet with Zelensky. We've heard from this Foreign Secretary, Sergei Lavrov, that such a meeting would take a lot of planning and agenda, and there should be agreements at hand. And so far, none of that is ready. So it's pretty clear that Putin does not want this meeting. It would probably delay it if it looked likely. We heard from President Trump earlier, who said that it was Putin's personal dislike of Zelensky that was probably holding this meeting up. So again, these comments are not really that surprising. Now, Trump has warned that if the fighting continues with or without a meeting, he would wage an economic war and there would be serious consequences for Russia. But so far, that doesn't even look likely to happen, as Russia launched a major drone and missile barrage against Kyiv, very deadly. So.
Yeah. Overnight, one of the most deadly this year. But let's also talk about perhaps some progress on the Ukraine-U.S. side of things. Zelensky's chief of staff is set to meet the U.S. envoy Steve Witkoff in New York today. So what will be some of the talking points there?
That's right. Zelensky's chief of staff is one of Ukraine's chief negotiators. He will be in the U.S. Again, one of the major topics of discussion will likely be security guarantees. If the war does come to an end, what kind of security architecture will be in place to make sure that it doesn't restart down the road? Ukraine has been pretty adamant that security guarantees have to be at the center of any kind of negotiated peace. So that's likely to be on the agenda, as well as continued support or what comes next in the war. Or the Ukrainians will be looking to try to maintain any kind of level of U.S. support in their fight against Russia. We're also likely to see the Ukrainians push for sanctions. Zelensky has frequently called for sanctions. Trump has been reluctant to impose them, and so far hasn't. Again, this meeting is coming in the wake of that Putin-Trump summit in Alaska. So the Ukrainians will be keen to keep Trump at least open to their positions and potentially supportive of them.
Bloomberg's Greg Sullivan, thanks for the setup. I'm going to continue the conversation. Joining me now is Elizabeth Braw, Senior Fellow at the Atlantic Council. Elizabeth, throughout the course of this week, we've spoken to several analysts, their impressions of the Alaska summit and then Zelensky's visit to the White House and what came out of that. And I will say that most people are pretty pessimistic that this summit is actually going to lead to any progress on peace talks or a potential ceasefire. Do you share that view?
So what needs to happen first is for President Putin and President Zelensky to meet. Without such a meeting with some sort of outcome, any other talk is really, any other conversations, discussion, negotiations are really almost futile, because without Russia deciding that it's going to stop fighting in Ukraine, and without Ukraine agreeing to whatever terms may be proposed and negotiating with Russia to come to a conclusion. Without that, nothing else really matters. So Western countries, Western allies of Ukraine can help try to speed that process along. But if Putin says no, then we continue seeing this war in Ukraine and increasingly deadly, as we've seen in recent days.
Yeah. So the attacks on Kyiv are continuing. Let me just ask you about the European response to all of this, because I guess one of the more positive developments has been that European nations, alongside the UK, with the Prime Minister Keir Starmer, have been showing a somewhat unified front. The EU leaders traveled with Zelensky to the White House a couple of weeks ago in a show of support for him. Can this unity hold up, do you think, amongst European countries?
It is extraordinary to see this unity. It has held up now for 3.5 years, more than 3.5 years of war in Ukraine, and under very difficult circumstances. European countries have had to make very painful adjustments. They have willingly given enormous military amounts of military equipment, enormous amounts of financial support to Ukraine, and also received a considerable number of Ukrainian refugees. And even so, their unity has held up. I think that's something it's worth noting now that they meet again to try to figure out what else they can do. And that unity is not to be taken for granted. Let's hope it holds up. But the European leaders so far have done well.
Yeah, I bring it up in the context of the very famous and outspoken these days, Mario Draghi. He gave a speech a week ago where he warned that Europe is merely a spectator at risk of irrelevance. And he's saying that 2025 could be remembered as the year of Europe's illusion of importance being evaporated because of the diminished geopolitical clout that they have on a range of issues, not just Ukraine. Do you think that criticism is valid from Draghi's perspective?
It is valid in the world in which we now live. The world has changed dramatically. If you look at the world 3-4 years ago,
Order filled.
It was set up to function according to various rules, and European countries were key observers of those rules, and under those rules they were also quite powerful, because if everybody follows the rules, then you don't need to be the world's most powerful country to be successful or to have a say. The world has changed since then immeasurably, and that's why they look weak, because they are set up for a world that seems to be deteriorating or vanishing almost on a daily basis.
Yeah. What about the EU-US trade deal? At the time, it felt like a major breakthrough, but of course, von der Leyen went back, and the deal itself received so much criticism from leaders around the continent. What is that going to do to this homogeneity that they're looking for, especially when it comes to these transatlantic relations? Because each one of these countries has different economic imperatives of what they're trying to achieve.
Each one of these countries does have different priorities, and it is amazing, I have to say, that they came together to find a common line, and not just a common line, agreement on details that they could all support in this trade deal with the United States, considering that they all stand to suffer to a different extent from this new arrangement. But they found agreement. They managed to negotiate an agreement amongst themselves that Ursula von der Leyen could then take to Washington and negotiate on that basis. I think what we're seeing is a clash between those trade tensions between the United States and the European Union on one hand, and then the security policy aspect, the defense aspect on the other hand, where European countries, including the EU, try to be as supportive as they can of the United States, because it is a key ally, at least formally and hopefully also in practice, but they are worried that practice may look different. So they try to be as supportive as they can, even as these trade tensions linger and cause acrimony.
How are you thinking about the French political stalemate at the moment? We know that a confidence vote is coming up. The current government is likely to once again get dissolved. Maybe we're back to the status quo of having to reappoint another prime minister. But of course, this is one of Europe's largest economies. With all of that going on, does it not hold back the rest of the European bloc? Because France and French leadership will be so focused on domestic political matters that it will be difficult to focus on more broader European ambitions.
It is interesting and extraordinary to see France when I think those of us who were alive maybe a few years ago, most of us will remember the constant turbulence in Italy. Now Italy looks stable. It has governments that stay in power for a few years and get things done. In France, that's not so much the case. And it is fascinating to watch today, this very day, the governments of France and Germany are meeting, ministers from France and Germany are meeting. The Germans are meeting with their French colleagues, knowing that in a few days' time they may no longer be in office. They will most likely not be in office. It is a bit of a concern to the rest of Europe, or to the strength of Europe, because the EU and the wider Europe need France to be strong, need France to be able to articulate policies, and that's hard when you don't have a stable government.
Yeah. Elizabeth Brault, thank you so much for joining us on the show today, Senior Fellow at the Atlantic Council. Well, speaking of France, as we were just talking about, it's grappling with political turmoil as Prime Minister François Bayrou faces a make-or-break confidence vote next month. He's set to negotiate directly with lawmakers next week. Now, earlier this week, the so-called French risk gauge hit a 7-month high, with France's benchmark bond yield premium over Germany topping 80 basis points. Now, Bloomberg's Julien Pontus is in Paris. We're looking at markets and sort of tracking all these market indicators to get a feel for how investors are thinking about the confidence vote. Some stabilization coming through in the last 24 hours, but does that necessarily bode well for Bayrou's chances at this confidence vote?
In a nutshell, absolutely not. I think what the market has priced is that he will fail. And he will be toppled on September the 8th, and that's the market pricing that you have. And it's actually not that dramatic when you look at it. We're back at 80, as you said, basis point, which was more or less the level of the political crisis when you get a little spike. The French stock market was hit like 3% on the first 2 days. Now it's stabilizing again. Some people, are looking to buy the dip. Some people are thinking, if he appoints another prime minister, if the budget can be rolled over into 2026, there are some scenarios where everybody lives. There are other scenarios, though, after the vote where you could have snap elections. You could have even some people are talking about Macron resigning. Obviously, it's not what people expect, but it's a possibility you can't rule out at 100%. But I would say people have priced, markets have priced the current, the level of political risk that there is, and it's still at a moderate level. I mean, there's a lot of room for things to get worse.
Yeah, okay, well, that's not a greatly positive note to leave it on. Just in terms of the near term, though, in the run-up to that confidence vote, are we expecting more turbulence, or is the outcome already priced in, do you think, over the next week, and that they probably will fail, and at that point, then it becomes a matter of whether elections are held or whether they can appoint a new prime minister?
Yeah, as I said, I think markets are pricing Bayrou to fail. If you look at betting websites, it's over 90%, 95%. When you look at the seats at the National Assembly, it's really hard to see any way for him to pull this off. So I think markets are pricing that at the moment. And probably they're hoping that Macron will appoint a new center-right, center-left PM, and that this will continue. I would expect probably some more turbulence if snap elections are announced. after the vote.
Yeah. Okay. Well, we're going to keep a close eye on that risk gauge, as we've called it, the difference between the 10-year French yield and German bond yield. We got up to 80 basis points. We've now recuperated some of it, but still back at the highs not seen since earlier this year. Well, moving to the UK now. A think tank says the UK could raise more than £32 billion over 5 years by imposing a windfall tax on commercial lenders. The proposal from the left-leaning Institute for Public Policy Research says the government should recover the profits banks are making from taxpayers on deposits held at the Bank of England. It says high street lenders have enjoyed a, quote, staggering state subsidy on the Bank of England's QE program in recent years. So this is a look at some of the key UK banks this morning. Really adverse reaction to this news that has come out. And of course, I should just say, this is a think tank proposal. We have to wait and see what is unveiled at the autumn budget. But still, adverse reaction. You've got Barclays down 3%, NatWest down more than 4.4%. Now, sticking to the UK, lobbyists are lining up to attend Reform UK's annual conference next week. According to data obtained exclusively by Bloomberg, 20% of public affairs executives are planning to head to the Populist Party's event. It is a sign that corporate Britain is increasingly taking Nigel Farage and the Reform UK party seriously as an electoral force. Bloomberg's James Woolcock has more. James, I've got to say it's an amazing evolution for the Reform Party since its inception, put together as sort of a fringe group. And now you see it becoming more and more mainstream, racing ahead in the polls. What does our own research say about lobbyists' inclination to participate in this conference next week? And why are they doing it?
So 2 years ago, 4% of the people we surveyed who are public and lobbying executives, who are the kind of people who are influencing businesses, working inside finance, healthcare, education, they went to the Reform 2 years ago, 4%. Last year, 12%. This year, in a survey that we've exclusively obtained alongside Opinium and the Chartered Institute for Public Relations, that's now 20%. That is pretty much level pegging with the Conservatives and far beyond minor parties like the Lib Dems or the Greens or the Scottish National Party.
Order filled.
It suggests that Reform are establishing themselves in the first time in the UK's past 100 years as a third party in the mainstream. Now, I spoke to Opinium's head of public affairs, James Crouch. He told me business are now taking Reform seriously.
Reform is doing well in the polls. Organisations want to understand basically what it really thinks, where it's headed, because I think a lot of people would say they don't really know. There's also a lot of scope to kind of influence that direction as well. Far more than a governing parties conference. An opposition parties conference is a great opportunity for organisations to get involved, try and influence the direction of policy and its priorities.
Now, that doesn't mean it's a dead set that Reform would be, say, the next government. James told me that actually local elections are still a big de facto next year to see if they are serious. But the words he used of business are dipping a toe and are curious to see if Reform are a party that can be lobbied.
Yeah, well, here's the thing. As it stands, the Reform Party only has 4 MPs in the UK Parliament. Therefore, why such a big interest in trying to work more closely with them and attend the conference next week?
I mean, it speaks to that IPPR report you just mentioned there earlier, Jemana. Business are casting around to see which political parties in the UK are genuinely the party of business. Now, Labour, as the government, has caused a lot of fears in the business community that they have a big fiscal hole to fill this autumn. There are all sorts of think tank proposals around taxes they could raise. Windfall charges on banks are one. Gambling taxes are another that's been raised. Another potential wealth tax. And so, meanwhile, with Reform being the highest polling party in terms of popularity in the UK, that may not hold till the next election, which could be as late as 2029, but certainly it's worth seeing to see what kind of policies a Reform government theoretically could give to business.
Yeah, the polling numbers are really quite staggering. And just to point out, for those not closely watching it, that Reform they're polling ahead of the Labour Party right now. So it's really quite fascinating. Thanks for walking us through it, James. Bloomberg's James Woolcock. Well, coming up, Chinese e-commerce giant Alibaba will report first quarter earnings later today. We'll have the details next. This is Bloomberg.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Well, some breaking news just in. Thailand's Constitutional Court removed the Prime Minister, Paetongtarn Shinawatra, for an ethics violation. The second leader has ousted in just over a year, in a move that intensified months of political turmoil. The 9-member court said Paetongtarn violated constitutional provisions on ethical standards in a leak call with former Cambodian leader Hun Sen about a border dispute. Judges said while she wasn't found lacking in integrity, her remarks undermined the pride of premiership and the nation. So just adds to the political instability in Thailand at the moment. Now, U.S. trade provision dating back to the 1930s, which eventually cleared the way for almost 1.4 billion small parcels each year, came to an end at midnight New York time. The de minimis tariff exemption allowed packages worth up to $800 to enter the U.S. tariff-free. The Congressional Budget Office estimates the move will raise more than $23 billion in additional tariff revenue for the government over the next decade. And Denmark is cutting its forecast for 2025 economic growth by more than half amid weaker prospects for pharmaceutical giant Novo Nordisk. According to government documents seen by Bloomberg, GDP is expected to expand 1.4% this year. That is down from the government estimates in May of 3%. The government cited U.S. tariff increases and a weakened outlook for the pharmaceutical industry as drivers for the revision. Chinese e-commerce giant Alibaba is set to report first quarter earnings later today. It comes after an intense price war in China's food delivery sector, which is hitting the country's e-commerce companies, forcing analysts and investors to slash their share price targets. For more, I'm joined now by Robert Lee, senior analyst for Bloomberg Intelligence. Well, yesterday, was it the day before, we were talking about Meituan and the downward move that was posing to the Hong Kong indices. What is that likely to do in terms of expectations for Alibaba today? This price war rages on.
Yes, exactly right. And I think two things are going to be in focus for the results. One is the margins, for obvious reasons. We've got price war in the mainstream e-commerce sector. And as you just referred to, and for those who don't know it, Meituan is the leading food delivery company in China, extensive market share across the whole, vast nation. And as you can probably appreciate, food delivery, though, is not a particularly high margin business. It's a scale and a volume business. So JD.com and Alibaba have been making strong inroads there. But the question is at what cost? So they've clearly been undercutting the pricing of their main rival. And I think that raises a major question mark on the level of margin that we see from Alibaba. So the other thing as well, there's been a lot of government subsidies. The government has done everything it can to underpin and support consumption within the country, given the economic headwinds and the tariff uncertainty. So again, somebody's ultimately got to pay for those subsidies, and that raises an additional question on margins. And then thirdly, within their AI business or their cloud business that services external AI customers, if you remember last quarter, they actually missed margins on there because like many subsectors within tech in China, the competition is cutthroat. It really is, very, very extreme. So I think there's a third area of margin risk there.
Yeah, and how is it faring so far versus some of those competitors that we have up on the screen right now, the likes of JD.com, Tencent, and others?
Sorry, I'm really sorry. I've lost. Can you repeat that question? I seem to have lost.
Of course, I'm just asking you how it's faring versus its competition right now.
In terms of e-commerce, I mean, Alibaba is the incumbent, and obviously it needs to defend its position. Taking a step back, though, we've seen a number of strategic changes with Alibaba. If you remember, within the last 2 years, they actually put forward a plan to disaggregate the business and maybe spin various parts of it off to try and realize value in recognition or in response to very strong shareholder pressure to realize more value, because this is a business which has been under sustained pressure for a number of years. They then did a complete about turn on that plan, and they have doubled down on their efforts to both defend their existing market share and make inroads in new markets. But again, that comes through cost cutting with the impact on margins, as I mentioned earlier.
Yeah. Robert, always good to chat to you. It's been a busy week. Robert Lee, Bloomberg Intelligence Senior Analyst. Well, listen to this story. Pop Mart's new mini Labubu dolls have sold out across China after their release across online retail channels in the country yesterday. The toys went on sale at 10 p.m. local time, and all available inventory was gone before some could even load the purchase page fully. The frenzy lends weight to the brand's staying power. Pop Mart's stock is up some 260% this year. So one for the Labubu lovers out there. And I know there are a lot of them over here in Dubai. All right. On Monday, our Brussels newsletter gets a fresh look with Bureau Chief Susan Lynch at the helm. So make sure you sign up for that at Bloomberg.com/newsletters. You do not want to miss. All right. Up next, Bloomberg Brief. This is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
The single best investment opportunity you see in the world, regardless of industry or geography. Why? And again, how are you making it available to your clients?
I think there's no question AI is going to impact everything we do. The opportunity to take great companies and use AI is going to transform. Also the issue of jobs. What do we do with jobs? Because there's no question, you look at things that are customer service oriented, and the AI is so much more efficient. As we look at across all these different opportunities, what we really like is data centers in the U.S. And the one thing that we know is that AI is just going to create this enormous demand for data and this even growing opportunity for cloud computing. So for us, owning data centers for 20, 30, 50 years, we're going to have a limitation on power in the U.S. There's no question over the next 20 years, the technology will change for chips. It'll become more competitive, and NVIDIA may not be the only major provider. So I think you're going to have a big technology refresh over the next 20 years. But the one thing we know is you're going to need data centers, you're going to need power, you're going to need cooling to support all this growth in the cloud. So we look at them as long-term bonds.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this Friday. 25 and more. Fed Governor Chris Waller endorses a quarter-point cut in September, and maybe more in the months ahead. PCE takes center stage. Markets await the latest read on inflation for more clarity on the Fed's rate path. And a federal housing agency sends a new criminal referral against Lisa Cook as the Fed governor attempts a pushback. It was another record high yesterday for this equity market, the second in a row. Are we going to get another day of gains? So far in this future session, it is not looking so. By the way, we had those records and even had the NASDAQ leading yesterday, despite the fact that we had NVIDIA earnings that gave a disappointing forecast. NVIDIA didn't even end down 1%. It did end down, for Dan Ives saying that it would be in the green at the end of the day. Even so, maybe a little bit of stress seeping into the market this morning. A lot to consider. For one, there's the issue of Fed independence. There will be a 10 a.m. court hearing over Governor Lisa Cook. And then we also get PCE. So at the moment, we're looking at the NASDAQ leading losses after gaining yesterday. The S&P down by about 0.4, NASDAQ more than 0.5%. The Russell 2000 has been outperforming as of late, and that continues. Meanwhile, for this bond market, it was some serious flattening yesterday. Today, that is not happening. It is again the long end that is leading the losses, up by 3 basis points. Your 10-year yield up by 2 basis points, standing at 422.65. Governor Waller yesterday saying yes, a 25 basis point cut. Maybe it will be more if the labor market data this month or this coming month looks worse than expected. Let's now look at some of the stocks moving underneath the surface. With that is Kriti Gupta. Good morning, Kriti.
Good morning, Danny. Let's kick it off with Dell this morning. This is the old guard of tech. The idea here that simply being has been one of the major winners when you talk about where you want to look at the next level when you're talking about your tech investments. If it's not NVIDIA, if it's not Apple, if it's not Microsoft, do you start to revisit the old tech guard, Dell or Oracle? This morning, the shares are down some whopping 6%. They had their earnings coming out yesterday. Kind of a double whammy here when it comes to the actual hit. The AI server backlogs really seemed to be a pain point when it came to these numbers. Their margin also not impressing Wall Street. That is going to be a key piece when it comes to those Dell earnings. We'll stick with the tech picture, though, except maybe in the opposite direction. Autodesk, of course, is your biggest, highest volume pre-market mover in the S&P 500. Those shares higher by almost 10%, Danny. A massive win. Citi calling it one of its best beat and guides in years. Massive move there for Autodesk, really impressing Wall Street, not just meeting them, but winning those expectations. Let's switch sectors, though. Caterpillar is going to be another stock to watch. This is, of course, the major bellwether, the major global bellwether. We really look to this one for its China exposure as well. Those shares down about 3% this morning. They are talking about a tariff impact of $1.8 billion. Really keep an eye on that. We're talking about so much cash in these balance sheets. Does tariff really pressure the margins? Caterpillar seems to say yes.
Kriti, thank you very much for that roundup, and we'll also catch up with you later in the hour. Let's go back to one of our top stories this morning, where a federal judge is expected to rule today on the president's decision in an emergency hearing, even as Cook seeks to block it with a lawsuit. Joining us now from Washington, D.C. is Bloomberg's Kasia Klimanshinska. Kasia, we get a hearing that kicks off at 10 a.m. What are we expecting? A very close-up Kasia there. I was going to say, I think we're adjusting Kasia's shot. But again, Kasia, we're going to get this hearing starting at 10 a.m. There you are, back in focus. What are we expecting?
Good morning. Thank you for having me on the show. Indeed, we'll find everything today. There will be a hearing at 10 a.m. That's after on Monday, President Trump has taken a step trying to get rid of Lisa Cook, firing her from the Federal Reserve Board, arguing that she claimed 2 real estates as her primary residences, and saying that the person who is responsible for setting interest rates, for setting the cost of mortgage rates, cannot make mistakes like this. Lisa Cook is fighting this. She filed a lawsuit yesterday saying that it's barely a clerical error.
So clearly a clerical error, but in the meantime, this is a Trump administration that is trying to move forward with getting more of Trump nominees onto the Fed board. Stephen Myron is among them. What is the plan there when it comes to Senate confirmation? How long or short does this process seem to be shaping out to be?
With President Trump not doing much today, all the eyes are on the Federal Reserve. The Federal Reserve is meeting on September 16th and 17th, And so now we have this candidate that President Trump picked, his close ally, Stephen Miran. He will have a hearing next week, and he is very likely to get confirmed and be in the seat before the Fed meets in the middle of the month to decide on interest rates. And so it is indeed quite likely that the Fed will in the end decide to cut interest rates in September for the first time this year.
Well, certainly. And you have a Waller yesterday, Kasia, who spoke about that, the desire to cut 25 basis points and maybe more if this is a data that comes in next month with inflation looking tame and at the same time unemployment looking concerning. Kasia, but when it comes to Lisa Cook, there's a real question as to whether she will be present herself at this year's Fed decisions. What is the possibility that you do get a stay, that you have a judge as this process plays out that allows her to continue to go to the Fed meetings, that allows her in the Eccles building? All right, I think we might have lost Kasia there. Kasia, thank you so much for joining us this morning. Again, that is Kasia Klemenschitska from D.C. But as I was saying, one of the questions is what happens as this plays out in the courts? We've seen things like tariffs, for example, with other court decisions around the president. This has been a court system that has allowed the president to continue tariffs. So will it be the same with Lisa Cook, that she can stay as it plays out through the legal system? Okay, let's get you some other top stories that are trending on the terminal this morning. And it is the end of duty-free imports into the U.S. costing $800 or less. It is the so-called de minimis tariff exemption that comes into effect today. The end of the provision is causing disruptions, with some postal agencies stopping U.S.-bound packages and businesses facing higher costs. The Russian and Ukrainian presidents aren't likely to meet. That's according to the German Chancellor Friedrich Merz. That's despite President Trump touting a possible Putin-Zelensky summit. The remarks come after Russia struck Kyiv with a wave of drones and missiles, defying U.S. and European calls to end the war. And Pop Mart's new mini Labubus are riding the momentum of their bigger predecessors. The smaller furry toys sold out almost immediately in China and in major overseas markets after hitting stores yesterday. Pop Mart shares closed down Friday, with the market having already priced in the enthusiasm for the popular toy. I feel like this is Furbies 2.0, just as demonic, just as scary, just as popular. Okay, coming up, we're going to look into the macro picture and what else is happening around the world. You are watching Bloomberg Brief.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
I would support a 25 basis point cut at the committee's meeting on September 16th and 17th. While there are signs of a weakening labor market, I worry that conditions could deteriorate further and quite rapidly. And I think it is important that the FOMC not wait until such a deterioration is underway and risk falling behind the curve.
Fed Governor Christopher Waller speaking at the Economic Club of Miami there. Waller also remarked on the potential impact of tariffs on inflation.
Oh, tariffs, prices will go up and it'll be more expensive. I got to ask for a raise. Well, you don't do it on the sales tax. You don't do it if your income tax goes up or any other taxes go up. What is it special about tariffs that makes you want to act differently? So that's kind of where I'm at. I'm back on team transitory.
Oh boy, the T word, it's back. Christopher Waller back on team transitory. Let's unpack all of that with Anika Gupta, Director of Macroeconomic Research at WisdomTree. Anika, wonderful to see you. It's been way too long. So there you have Christopher Waller endorsing 25, also goes on to talk about maybe the size should be bigger if the economic data appears to deteriorate from what we get in September. When you look at stuff like that, Anika, do you assume that this is who's going to be heading the Fed come 2026? Is this a de facto dovish policy for 2026?
Well, very good morning, Danny. You know, we've got a lot going on at the Fed, clearly with, you know, the news around Lisa Cook. And then the data that we received yesterday with, you know, the estimate for second quarter up 0.2%, revised higher. We've also seen real final sales to private domestic purchasers, you know, which was primarily a sum of consumer spending alongside gross fixed investment. It's an indicator that Jerome Powell generally does serve as a good underlying growth, serve as a good indicator for underlying growth trends. That's also been revised higher by 0.7 percentage points. So I would say, you know, Fed Governor Christopher Waller's comments are, again, pointing in the direction towards more dovish monetary policy. But having these figures in mind when he spoke last night, it clearly is opening the way, you know, paving the way for not necessarily a 50 basis points interest rate cut for September, but definitely indicating that, you know, a 25 basis point cut is definitely on the way for September.
At the same time, Anika, I mean, again, to the point of the data yesterday, if you get a second quarter GDP that is raised from the first initial estimate, you get headline PCE revised down, weekly jobless claims that fall. Doesn't that point to a stronger economy that doesn't necessarily fit with the picture of more robust rate cuts to come?
That's a great point, Danny. It does. It does tell you that things are looking a lot better than expected, but it's important to keep in mind that, you know, we are seeing other signs of data cooling in the U.S. economy, especially on with the labor market. We have had, you know, a much weaker payroll report last month. And I think what's important to see is how investors are now going to digest the impact of these higher tariffs. Are we going to see, you know, consumption start to cool? And that remains a very important factor for the U.S. economy that is so reliant on the U.S. consumer. So I think in anticipation of that, and given the fact that we believe they're being quite slow, you know, a rate cut in September seems to be the right way forward.
Anika, we have seen, just looking at this curve, the front end really has been pricing that in. The long end may be pricing in concerns of independence deficits and moving higher. I want to focus, though, on the 10-year. Despite some of the better economic data, it's been a 10-year that has, one, been stuck in a range, but if anything, has been falling, currently trading around its lowest since the start of this month. And despite some of the 2-year forward inflation swaps moving higher, what do you make of where the 10-year currently sits?
No, that's right. It has been, you know, trending in that range and actually moving lower. And I think what it is in a way pricing is the expectation that the market has of further rate cuts along the way. And I think that's what it is actually signifying. Now, whether we get all those rate cuts, given the recent strength in data that we've seen, is yet to unfold. You know, our view still remains that the U.S. consumer is likely to face much higher prices, much higher tariffs, and that could have a dampening effect and a cooling effect on the U.S. economy.
A dampening and a cooling effect, Anika, but in terms of the impact of inflation, are you like Chris Waller back on team transitory?
It's really hard to say. We've seen these trade wars now pass on beyond just U.S. versus the rest of the world. We're now seeing other countries, such as Mexico, place tariffs on China. So that's just telling us that as other countries also start to pick up on these trade wars amongst themselves, that could have an impact of higher prices across the globe, which could not just be a one-off effect. And it's important to see whether that follows amongst many other countries. So I would say for now, it's a bit difficult to actually to get a clearer picture of whether this would be just a one-off. But I think prices are likely to go higher, and it's going to be interesting to see how U.S. consumers or the U.S. corporates actually absorb that.
Anika, I feel like it must be somewhat frustrating to try to do macro research right now and apply it to markets, because you can have a view like that and markets really aren't trading on tariffs. Or, for example, you could have a view on Lisa Cook and the threats to that Fed governor and independence. And again, markets have not really traded it in. Yes, curve steepening, but at the same time, a dollar that's been little moved. Anika, why do these markets seem more and more immune to some of the political and policy headwinds that have been coming in a serious way?
It's hard to say, Danny. I think it's in a way it's going to be a long fight that could play out, and markets are just shrugging it off. I think what markets are trying to do is they're trying to just look at the implications of these sequence of events. And what it is trying to tell us is, you've now got 4 out of the 7 members on the FOMC, on the Fed committee, that are likely to be pointing in the dovish direction. And so what do we do? What do we infer from that? We do infer a more dovish path to monetary policy in the US, which could aid or somewhat offset that impact of slower growth and those higher tariff rates. And that's what markets are pricing. So that's how we're viewing it.
To that point, jobs September 5th, CPI September 11th. Anika, how high is the bar for those to act as a disruption to the current market pricing we have for cuts come September?
Yeah, I mean, on the one hand, if we do continue to see weakness on the US labor market, then that does open up and give plenty of ammunition for the Fed to lower rates. And so that's the path that the markets are pricing. However, on the flip side, if we do see a bigger jump in inflation, then that reinforces Fed Chair Powell's more cautious stance on maintaining maintaining a much more measured approach towards loosening of monetary policy. Instead, he might cut and then hold for some time just to observe the data, and then follow on with another rate cut.
Hey, Anika, we're going to have to leave it there, but it was so great to catch up with you this morning. We need to do this again soon. That is Anika Gupta of Wisdom Tree. Coming up on the show, Trump's Intel deal was designed to block the chipmaker's Foundry spinoff. A look at that and what else is making headlines and your front page news. All of that coming up next. You're watching Bloomberg.
I think with the new world reorder, it means that there will be regional clusters of excellence. There will be regional clusters of great companies. And so it's okay to be number 2, because you could be number 2 in every single region and still command that premium. Because today we talk about AI, we talk about data, we talk about processes that's going to be very specific to industries, specific to countries, specific to regional challenges that needs to be built and addressed. And therefore, the good of it is that now it's not just going for that one company and overpaying for that company until the returns goes to zero. It's actually about finding regional champions, which could also be huge category leaders for us as funds as well. And I think it's actually good for the world to have multiple pots of excellence that can be localized to its own needs.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
You are watching Bloomberg Brief. I'm Danny Berger in New York. Let's get you now your front page news. A look at what's making headlines. First up on the Wall Street Journal. On their front page, reporting that President Trump is leaning on national security to justify the next wave of tariffs. Deals on steel, aluminum, and other industries expected to rise. This justification to provide a legal backstop for policy. Next up on the Washington Post, reporting that the White House has tapped as top deputy to Robert Kennedy Jr. as acting CDC director. That's according to 2 unnamed sources. The selection of Jim O'Neill, who is currently the department's deputy secretary, potentially clears the path for Kennedy to continue his overhaul of vaccine policy. And on the Financial Times, reporting that the Trump Intel deal was designed to block the sale of the company's chip-making unit. That's according to Intel's CFO. Intel has been under pressure from investors to spin off or sell its loss-making foundry business. For more, we are joined by Bloomberg Tech Europe host Tom McKenzie. Tom, there has been a lot of questions swirling around Intel. Exactly what the White House is hoping to achieve by taking a stake in Intel. What does this latest report from the FT do to color some of those questions?
Yeah, I mean, absolutely. To your point, Dana, we now have more details in terms of the Trump administration's thinking around this deal, at least according to the CFO of Intel, speaking at a Deutsche Bank event and reported by the Financial Times, saying that essentially what you were having was a CHIPS Act subsidy that gets converted into equity. We knew that part, of course, prior to these comments from the CFO, valued at around $8.9 billion. That is the injection of liquidity from the Trump administration on the terms of these deals. What is new is that the CFO is saying that a key part of that is that this is a Trump administration that wants to make sure that Intel doesn't spin off the foundries part of the business. They come under pressure from some of their own investors, some on their own board, in fact, to consider spinning off the foundries business that was such a central part of wrapping up the losses that we saw last year, 2024, losses of about $13 billion for Intel, as they spent heavily on the foundries part of a business to try and compete with the likes of TSMC and Samsung, ultimately with plans to build out what would have been one of the biggest foundries in the world in Ohio. The new CEO comes in, Lip-Bu Tan, and rethinks that whole strategy. And there have been all sorts of rumors about whether or not they would spin off the foundry part of the business. It goes back to your point and the previous story around national security. We know that national security is important to the Trump administration around these key industries. And it seems that when it comes to the foundries, they want Intel to continue that push into the foundry business. They have the liquidity now from the government, from SoftBank, but they still don't have any customers. And that's the next key component for Intel. They need to lock in the custom of the likes of Apple and Nvidia to really make this work.
Hey, Tom, can I just ask you about Nvidia yesterday? Because we had its earnings, sure, it was Wednesday, but I mean, the stock didn't even end down more than 1%. Tech stocks rallied yesterday. The NASDAQ outperformed after Nvidia reported it was down 3% in the post-market. Why this kind of change in heart around it?
Yeah, all the lead up, of course, to the earnings was a suggestion you could see moves of around 6% on either side, depending on how the earnings came through. And you read the notes that come through from Wedbush's Dan Ives. He was on, of course, Bloomberg TV, and he said, look, it's going to turn into the green by the end of the day. And it wasn't far off, of course. But the question is, this is still phenomenal growth. This is Jensen Huang. He's no longer driving a McLaren F1. He's driving a Porsche. So he's still in a good position. The growth is still there. It's just you're getting growth of around $50 billion US dollars, or around 40% growth versus 400% growth, which was what was being notched up in some quarters of 2024. So it's just coming off a very, very high base. And it's still a company that has about 90% market share with AI accelerators. I think all of that is being digested by the markets. When on valuation, in terms of forward PE, it's not looking too stretched for many, around 34 times.
I love that. Not a McLaren F1, but a Porsche. The cost differential is probably immense, like many, many millions versus a Porsche. But anyway, Tom, thank you so much. Tom McKenzie there in London. Coming up, is transitory back? We're going to discuss Fed Governor Waller's remarks with MUFG George Goncalves coming up next.
A cidade estava sitiada.
Isso ao começo eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho talya ki kon ahmale pa ahma ta suara pang ko ahmale pa manchang le ay kon mamanya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Order filled.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know. 25 and more. Fed Governor Chris Waller endorses a quarter-point cut in September and maybe more in the months ahead. PCE takes center stage. Markets await the latest read on inflation for more clarity on the Fed's rate path. And a federal housing agency sends a new criminal referral against Lisa Cook as the Fed governor attempts to push back. The second day yesterday of a record high. We ease off of that this morning. We're down by about 0.5% for the NASDAQ, 1/3% for the S&P. By the way, we got to that record high yesterday, even with what was supposed to be disappointing NVIDIA earnings. But the stock didn't even end down 1%. It ended down less than that. But heavy focus on the Fed's independence this morning with the court hearing for Lisa Cook at 10 a.m. We also had curve flattening for this bond market yesterday. That eases this morning. It is the long end that is leading the losses. We are up by nearly 3 basis points, 490 on the 30-year yield. Your 10-year yield, that stands at 422.45, higher by 2 basis points. Let's look at some of the stocks moving underneath the surface this morning. With your stocks to watch is Kriti Gupta. Morning, Kriti.
Good morning, Danny. Let's talk about Dell here, the old guard of tech, taking a little bit of a beating this morning, down by 5.8%. There are 2 reasons for this, a 1-2 punch, a double whammy for the stock. One is going to be this AI backlog or server backlog. That's going to be really crucial. They're also seeing some pressure on their margins. This is a theme that you're seeing in a lot of the corporate earnings. Those shares down by just shy of 6% in the pre-market. I'm going to stick with the tech theme, though, in the opposite direction. Autodesk, of course, is your biggest pre-market mover to the upside. Also a big earnings story, a massive beat and raise from Wall Street, getting a lot of praise to this stock. Citi calling it one of the best earnings reports in years. We got to go back down to the downside, though, Danny. Caterpillar, of course, the global bellwether, the construction equipment maker that has that China exposure, talking about a $1.8 billion tariff hit. Those shares down by about 3%. Looks like margin pressure eating into their bottom line as well, Danny.
Yeah, seeing that throughout industries exposed to tariffs. Kriti, thank you very much for your work this morning. Let's now get back to one of our top stories, though. Fed Governor and Fed Chair candidate Christopher Waller calling for a rate cut.
Based on what I know today, I would support a 25 basis point cut at the committee's meeting on September 16th and 17th. While there are signs of a weakening labor market, I worry that conditions could deteriorate further and quite rapidly. And I think it is important that the FOMC not wait until such a deterioration is underway and risk falling behind the curve in setting appropriate monetary policy.
Then Governor Waller went on to say this.
Oh, tariffs, prices will go up and it'll be more expensive. I got to ask for a raise. Well, you don't do it on the sales tax. You don't do it if your income tax goes up or any other taxes go up. What is it special about tariffs that makes you want to act differently? So that's kind of where I'm at. I'm back on team transitory.
For more, we are joined by Jamie Rush, Director of Global Economics for Bloomberg Economics. So, Jamie, Waller is back on team transitory.
Morning, Danny. Yeah, he is, isn't he? And he couldn't be clearer that he wants to see rates go down in September. And markets, of course, are seizing on these remarks as well as other recent comments. And they're feeling very confident. So we've got an 85% chance of a cut priced in for September. But I think what we do need to remember, though, is that all of even his comments, but also other policymakers' comments, are conditioned on the data. And there could yet be a turn in the road. So, I mean, today we're getting PCE data, and our US team sees a small climb on the Fed's preferred gauge of core inflation to 2.9 from 2.8. When we look at the detail behind that, what is it that's driving it? Well, actually, it's to do with markets. So markets have done well, portfolio management fees are going up, and that's going to push up on the inflation reading. And because it's services, that could be a bit sensitive for the Fed. So a little bit of a upward pressure on inflation there. Further ahead, though, the next critical data release is going to be the payrolls data, right? And so our very early view is that this is potentially going to come in reasonably strong. And so while the market is pricing in 85% chance of a cut, our US team, led by Anna Wong, thinks that it's more like maybe 50-60%. So much less conviction there, and she does have a tendency to be right. So there's still a lot to play for before that cut comes into view.
So that's the big data, but we also have a little taste today, perhaps. We have PCE, we have University of Michigan. Jamie, what's the expectation?
Yeah, I mean, so I said PCE, little modest increase in core inflation reflecting those fees. I mean, generally, if you look at the US economy, it's holding up okay, right? We haven't seen a sharp downturn in momentum or business confidence. Things are holding up okay. The job market is obviously we've had the history redefined for us on how strong that was, but we're not seeing signs of a sudden sharp downturn. So, general picture is steady as she goes. Monitor the data closely. cuts are probably coming, but maybe not as baked in as we should, as markets are currently expecting.
All right, Jamie, thank you very much for that. That is Jamie Rush of Bloomberg Economics. Now, here's what George Concalves of MUFG says on the rate path ahead. He writes, if the labor data were to weaken further, the Fed can pull forward cuts that are priced in for 2026. So we keep the option of 2 cuts as our base case, but wouldn't be surprised to see another cut for a series of 25 basis point cuts at the remaining 3 meetings. And George joins us now. He's head of U.S. macro strategy at MUFG. George, great to see you this morning. I got to say, that kind of reflects from what we heard from Chris Waller. So when you look at Governor Waller giving these speeches, does that really set the tone for where the FOMC is headed from here?
You know, there's a lot of, it's almost like a deja vu happening in 2025, like 2024. Last year, Waller kind of led the charge with the 50 bip cut, although he never really came out and said that, but he was one of the people that were kind of proponents towards that. Kind of calling for a cut in July, dissenting in July, ultimately being proven right that the data has been overstated, especially on the jobs market. It's not as robust and as resilient as Chair Powell's claimed. And then, of course, we had Chair Powell do a second pivot. Again, this deja vu of 2024 coming back for 2025 feels similar but slightly different. I'm more in line with Waller's view and have been for quite some time. We think that's easier to cut than to stay on hold now because the jobs data is clearly weakening. But we have that data that's coming out next week, and then the following week we have that big revisions we have to look at as well.
George, though, in the meantime, some of the data we've gotten has been robust. You just look at yesterday, we got that second quarter GDP where it was stronger than expected. Some of the headline PCE was also revised down. And then we got weekly jobless claims that also fell. What do you make of that, though, that some of the growth data has been holding up quite robustly? It doesn't appear to be an economy that's really caving in to whatever issues might be there with the labor market.
Well, look, I mean, I think we have to take the first half on average between Q1 and Q2. Just looking at one quarter at a time, considering the volatility that we got around the tariff announcements and now the eventual tariff implementation, I still think the jury is out in terms of the full impact of that on the economy. So a bounce back and a stronger move with the fact that PCE went down, all that stuff tells me that we're getting mixed readings on the economy still.
So we're getting mixed readings on the economy. Does that account for why this has been a 10-year yield that's barely moved, George? I mean, it's been trading in such a tight range. And if anything, it has been falling, despite the fact you have some serious curve steepening going on in the front and the longer end. So what do you do with the 10-year yields right now?
Look, I think it's literally been, I think you're spot on. It's been a range trading environment. We've had a 4%, 450. We haven't gotten down to 4% yet, but I think we will once the Fed starts cutting. The 4 to 450 has been the range. And as long as we don't get a change or a kind of acceleration in activity, then there's no reason to go above 450. And conversely, to get under 4%, you really need the Fed to cut more than once.
At the same time, though, as I was saying, it is a curve that's been steepening. It's been a 30-year yield that's creeping higher towards 5%. What is in the price? Because it's everything from concerns around Fed independence to what's happening internationally with bond yields going higher everywhere, to deficits, to inflation concerns. What is the driving force of this long end?
No, I think that is a great point. The point around the linkages to overseas markets, I think, is sometimes overlooked, especially by U.S. investors. But in general, like there was this, decade-long search for yield, capital into U.S. fixed income markets, and now they have a viable alternative, within their own home markets in Europe, in Japan, especially. I mean, higher yields elsewhere is making the U.S. have to fight to kind of keep its market share.
What does higher yields, though, globally say about this moment that we're in, George, where so many different governments and countries are having diminished fiscal headroom? You look at what's happening in France, a government potentially collapsing again over trying to bring the deficit in. Japan also having decade highs on their 30-year yield, setting new records. What does it mean for this time when deficits are raising everywhere that long-term debt is trading at such high yields?
Look, the real cost of capital for sovereigns are being challenged because of the fiscal debt sustainability concern. I think that's a valid concern. It's not going to go anytime away, and it's going to be something that bond investors are going to command a premium. And that's why even if the Fed cuts or we get these divergent central bank policy actions, long-term rates will probably stay higher for longer.
That really brings into the fore the question of fiscal dominance. If we are going to get into a situation where central banks are forced to ease policy because of higher debt levels, George, to what degree will that be a dominating narrative, maybe for the second half of this year, maybe for 2026?
I think it's yes. I think you're onto something. It's definitely going to be a big topic. It's starting to come into the zeitgeist between now and next year. We'll see. I mean, on the one hand, the U.S. is at least benefiting in terms of tariff revenue, and if we don't go and spend that tariff revenue, that should allow us to at least curtail some of the deficit a little bit here. We have the potential for a government shutdown in October around the budgets. So I don't think we're going to have runaway deficits at this point. But just in general, the fiscal dominance, I think, is going to really be a big topic. But for me, those 3 cuts that the Fed is going to deliver are going to be based purely on macro fundamentals. The cuts that happen in 2026 could be driven more around fiscal dominance.
Does that mean if we're getting cuts in 2025 driven, George, on macro fundamentals, that the risk of a long end that moves higher as the Fed cuts, is that diminished if it's on macro fundamentals, or could we still find ourselves in that environment?
Yeah, look, it could be counterproductive. We saw an element of that last year. This is why I keep coming back at the start of the deja vu. The Fed cut 100 basis points last year, and long-term rates rose 100 basis points, right? And look, and the markets have a tendency to price things in before the actual event. So we could argue that a good amount of cuts are already embedded across the whole yield curve, not just the short end. And so I do think that there is that risk. The difference being, though, is going to be a timing issue. Like the labor markets, look, what Chris Waller mentioned around, like, you can't wait and see to let the labor market get weaker. There is a nonlinearity aspect to the jobs data. If it gets worse, it usually gets worse really fast. And you can maybe see some sort of cleaning house into Q1 of next year, and then the economy gets softer. Conversely, the big, beautiful bill and some of the sort of pro-business measures should kick in at some point in 2026 as well. And so I think that kind of tug of war between, is how much weakness do we truly have? How sustainable is the weakness relative to we're spending a lot of money, and it's going to, also tax breaks are going to help out businesses in 2026.
George, it's such a good point. There's so many cross currents for this market, for this economy to deal with. But if we are in that environment where yields continue to move higher as the Fed wants to ease, not even because of fiscal dominance, but just because of how counterproductive that would be, to your point. And this is a White House that wants mortgage rates lower. Could you see a Fed that starts to do things to try to control the curve, be it something that looks like yield curve control, or we go back to the great financial crisis where QE comes in and there's balance sheet adjustments around things like longer term debt, like MBS, to attempt to bring a long end of the curve down?
Look, I mean, we might be getting ahead of ourselves a little bit, but I do think the Fed has a lot of tools at its disposal. The administration knows that as well. In general, policymakers know what options they have if things were to get worse. I don't think we're at that stage yet. I do think that, Chris Waller has been a big proponent of adjusting the balance sheet, tweaking it in terms of where they allocate their bond allocations. So maybe they buy more short-term bonds. They kind of tweak things a little bit to try to anchor the very front end and force investors to look for yield out the curve. There's things that can be done before you go to the heavy hand of QE and YCC.
Yeah, fair enough. Hey, well, we'll just repeat the title of Governor Waller's speech. Let's get on with it. So September, here we come. George, thank you very much for joining this morning. Wonderful to see you. George Goncalves of MUFG. Now, coming up, the Trump-Cook fight intensifies. An emergency hearing is set for this morning after she files a lawsuit against the president. We'll have your preview for that coming up next on your Bloomberg Brief.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. we go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obed. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff.
Order filled.
You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
I believe she just filed a lawsuit today, and Mr. Pulte has deferred those allegations over to the Department of Justice to investigate them. What I will say is that you had these mortgage receipts very clearly shown to the president, and he has the cause that he needs to fire this individual. He laid it out in the letter that he provided to her and to the public as well. And so we'll continue to fight this battle.
White House Press Secretary Caroline Leavitt speaking about President Trump's move to fire Fed Governor Lisa Cook. A federal judge is expected to hear today the president's decision. It's an emergency hearing, even as Cook seeks to block it with a lawsuit. Joining us from Washington is Bloomberg's Kasia Klimanshinska. So, Kasia, we have a hearing that kicks off at 10 a.m. Eastern. What are we expecting from it?
Good morning. Indeed, this is a historic, unprecedented fight between the White House and the Federal Reserve. And today it will land in front of a judge. This is a Biden appointee, a judge that will decide whether Lisa Cook gets a restraining order allowing her to continue to work and appear at the Federal Reserve, especially later in September when the Fed meets to decide the level of interest rates. As you have mentioned, the White House is seeking to fire Cook, pointing to those inconsistencies, let's say, in her mortgage applications where she appears to be claiming 2 properties as her primary residence.
So we'll see how that unfolds, whether Cook is let in the building for that September decision. There's a question as to whether Stephen Myron will be let into the building and make it on time for the September decision, too. Kasia, the confirmation hearing getting closer next week. What are we expecting from it and Myron's ability to get into the Eccles building sooner rather than later?
Yes, so next week, September, Congress will be back here in D.C. for their session, and Stephen Myron will have a confirmation hearing on Thursday. He is very likely to be confirmed first by the panel and then on the Senate floor, which will allow him to join the FOMC in the middle of the month to vote on interest rates. Even as Democrats are opposing this nomination, they are quietly admitting that there is very little they can do. They will probably try to stall, and they can delay, but only for a couple of days. So the administration is expecting to have Myron at the FOMC meeting in September.
Kasia, just to wrap things up, there was a really interesting story from the FT today about the Intel stake and about what Washington, D.C., what their skin in the game, why they did it, and why they invested it. The CFO speaking at a conference. What did we learn?
Great question. Indeed, another very controversial move from the Trump administration to claim a 10% stake in Intel. There are questions about this transaction. The transaction is still in works, and the FT is reporting today that part of the move is aimed to stop Intel from selling its manufacturing facilities. In other words, the Trump administration is trying to keep those jobs in the U.S., perhaps also for security reasons, to make sure that some of those semiconductors are indeed made here in the U.S.
Kasia, thank you very much for that roundup of the going-ons in Washington, D.C. Again, that court hearing taking place at 10 a.m. this morning. Bloomberg's Kasia Klingman-Shinska, thank you so much. Now, elsewhere in Washington, the U.S. has officially begun implementing new tariffs on small packages from around the world, ending a loophole that has allowed for billions of dollars of goods to enter the country duty-free. Joining us now is Bloomberg's Roz Matheson. So, Roz, the end of the de minimis exemption starts today. Just how much of a headache and friction does this now introduce into the trade system for the United States?
Well, obviously, given all the trade stuff that we're seeing from this administration around reciprocal tariffs, sectoral tariffs, and now small packages, it is inevitably causing a lot of confusion. You can see that with countries saying we need to stop some of these small parcels going until we can figure out just how it's going to work in terms of all the paperwork and the spreadsheet of different kind of fees that may apply depending on where you're sending it from, what's in the package, and so on. So a lot of initial confusion you can expect there. But it's interesting to see that this clampdown, in a way, has bipartisan support. It's something even the Biden administration did look at trying to clamp down on, because the sense is that a lot of big companies could ship a lot of stuff, under $800 and not be on the hook for any kind of fees for it. And so there is that support. The idea this could provide a revenue spinner for the government. And so you see perhaps the EU, the UK, others looking at this also and wondering whether they can also get some revenue out of it. But as you say, the impact could be significant, because you can see already parcels from places like China slowing down, businesses being impacted, and not just the big players. There's a lot of small businesses that send these parcels into the US as part of their revenue, and will they take a big hit as a result? So it could have all kinds of consequences for the US economy and for trade, but initially it's going to be quite disruptive, to say the least.
Well, Roz, with all things trade, there is still this lingering question over to what other countries will do, and for the most part, they haven't been retaliating. It seems like that may not be the case when it comes to Brazil. What is happening there?
Well, that's right. So Brazil has authorized the start of a process to think about potential retaliation. So this is just the first step, and it's a long road. So 30 days for this panel to look at options, maybe then to refer that to some ministers to think about further options, and does that include retaliation of a sort? So this is in no way suggesting that Brazil's gearing up to retaliate. They're giving themselves the option, and they're talking still about wanting to negotiate. Can we negotiate some understandings here? But starting on that road tentatively, at least, to think about some kind of response, and would that include reciprocal action against the US?
Hey, Roz, really appreciate that roundup this morning. Thank you so much. That is Bloomberg's Roz Matheson. Now, coming up, a host of data and a hearing on deck. We're going to have your trading diary for you next. This is Bloomberg.
The The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Jumana Versace in Vienna, and this is Bloomberg.
Let's get you set up for your trading day on this Friday. First up, PCE and personal income and spending data. That comes out at 8:30 a.m. Eastern, followed by UMISH. That sentiment survey comes out at 10 a.m. Also at 10 a.m., an emergency hearing on Fed Governor Lisa Cook at a federal court in Washington, D.C. Now, some earnings that are moving stocks this morning. Dell, that is down even after beating a raise, but it had tighter margins on AI servers, down 6%. Marvel Technologies plunges 14%. Also down as data center revenue missed expectations. Meanwhile, Petco, the best ticker of all time, woof, up 15.5%. It raised its earnings forecast. All right, as we head to the end of the hour, a quick check on your bond market because we are lower. It continues to be curve steepening this morning, down by 2.5 basis points. All right, that is it for me on Bloomberg Brief. Surveillance will take things from here. You're watching Bloomberg TV.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And So far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
If you look at what's driving the market, and is it a very small group of companies? Absolutely. That's very concerning.
What we're seeing in the large cap space is, at least on a short-term basis, a lot of good news is priced in.
Everybody at this point is functioning under the fog of uncertainty.
Markets tend to dislike uncertainty in any form.
There is a sneaky Uber bull case out there lurking.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning from New York City. For our audience worldwide, this is Bloomberg Surveillance. This morning, alongside Matt Miller, I'm Anne-Marie Hordern. Coming into Friday with stocks closing at all-time highs, Fed Governor Chris Waller once again calls for the Fed to lower interest rates in September and look through tariff impacts on inflation.
Prices will go up and it'll be more expensive. What is it special about tariffs? So that's kind of where I'm at. I'm back on team transitory.
We'll get a fresh read on prices with the Fed's preferred inflation gauge out at 8:30 Eastern. Then at 10 a.m. in Washington, D.C., a hearing is set as Governor Lisa Cook requests a restraining order to stay, Matt, at the central bank.
Yeah, this Cook story is just getting out of control in a way that, you would expect to move markets. And yet we're seeing the 10-year hover at 420. It's just shocking to me that the bond markets don't care at all. I mean, there must just be so much liquidity that it doesn't make a difference.
Well, I think right now the market is just basically thinking this has to play out in the courts before they actually start considering if this really is the president impeding on Federal Reserve independence. And that's why everyone's going to be focused on the data. But when it comes to the data...
Did you say if this is the president impeding on Federal Reserve independence? As if there's a question?
Well, there is a question amongst a number of people on what for cause actually means. And at the end of the day, that'll be up for the Supreme Court to decide. But that is why the market is focused on data. But do you have to even worry about the inflation data today when you just heard Fed Governor Chris Waller double down saying we need a September rate cut, even opening up if the data is very weak to potentially a jumbo rate cut, and saying the tariff impact, look through it for now.
Yeah, he also said that inflation is hovering around the 2% target rate when it's well over 50% above that. Like if you owed me $100 and then I demanded $150, that would be unfair, right? I can't believe that no one cares about inflation above 3% and going the wrong way.
That's right. They are pretty much ignoring inflation because they're concerned about the labor market. The labor market report next week will be the most important data point, I think, for this upcoming month of September.
Right, but we're at 4.2% unemployment. I'm 51 years old. I've never seen unemployment this low, right? It's the lowest it's been since the 60s. So the labor market would have to get a lot worse before we move out of full employment.
Order filled.
Sounds like you are not in favor of a rate cut. You would not be under the president's list for potentially becoming the Federal Reserve chair. Coming up on the program, Matt is joining me this morning. You could tell it's a Friday in the summer when John and Lisa are off and they let Anne-Marie and Matt do the show together. Brian Nick of New Edge Wealth with stocks pulling back after hitting all-time highs. Ed Mills of Raymond James as Fed Governor Lisa Cook's lawsuit heads to the courts. And former NEC Deputy Director Everett Eisenstadt as the U.S. closes a trade loophole. We begin this hour with futures softer as investors await the latest read on inflation. Brian Nick of New Edge Wealth writes something big and something negative would have to come along to knock stocks down in a significant way. And our imagination is running low on what that might look like. Brian joins us now. Your imagination is running low. Why? Because nothing so far we've seen out of Washington has pushed this market to recalibrate. Is that accurate?
Just the tariffs in April, which were quickly rolled back, and then have kind of been rolled forward again, but more in kind of a slow way that markets have more time to digest. But you're absolutely right. The Fed independence issues do not seem to be affecting markets. I think the one area where we are seeing it show up is the steepness of the yield curve. If you look at the TIPS curve, short-dated TIPS yields are moving down because inflation expectations are getting higher. higher, and expectations for rate cuts are getting priced in. That's pretty unusual to see those two things happening at the same time. Meanwhile, the longer end, we've seen rates climb higher and higher and higher because there is this sense that whatever dovishness the Fed is going to undertake now, whether it's just the people on the FOMC becoming more market or because the Fed is losing independence and is going to become more dovish, that we're going to have to pay for that sometime in the future with higher interest rates down the road. So that is where we call it zoo steepening because it's a bull market at the front and a bear market at the back. Lots of animals involved. And that's one of the things you typically see in countries where there's a concern about a loss of central bank independence.
You also say your clients seem to be at least tactically accepting this stagflationary light environment. So what do you do in that type of environment?
Stagflationary light just means that we're not seeing a recession, but we're seeing growth fall from at trend to below trend, and we're seeing inflation rise from too high to much too high. And in that trend, I think people remember 2022. They're traumatized by the dual losses in stocks and bonds, and especially risk-adjusted bonds did much worse that year. So people are avoiding duration. They're asking us questions, why would I want to get into the equity market at all-time highs, very high valuations? And we're seeing more conversations just about how to manage cash. How can you get some yield at the front end? And the good news is, unlike the 2010s, where you were basically accepting zero, you can at least get 3, 3.5, sometimes 4 and above, depending on how much credit risk you're willing to take. And people will seem to be okay with that because the outlook for the equity market from here, for a lot of our clients, is not really that robust.
So are a lot of people actually hanging out still in cash? I mean, when I talk to asset managers on my program, Bloomberg Open Interest, every day from 9 a.m. to 11 a.m.
Oh, please.
Yeah, asset managers, wealth managers are saying they do have trouble pulling people out of cash still, even, I guess, because of the fact that we're at all-time highs.
I would say that most of the cash we're seeing in client accounts right now is actually coming out of fixed income. Their fixed income allocations are not as robust. It's been a tough year for municipal markets, so if you're a high net worth investor, you have tax sensitivity. Munis have had a tough year because there's been so much issuance. So they're saying, well, instead of taking that risk, why don't I just hold that part in cash? I can deploy it later. We are seeing a willingness to take on equity risk both in the public and private markets. I don't think there's a loss of appetite there yet, but it's the incremental dollars that are not maybe going into that kind of that fully invested portfolio because we have seen everything have such a good run this year.
By the way, how much room do we really have to run higher on equities? I mean, valuations are historically at a fairly high level, right? 6,500 on the S&P 500 is an all-time high, even when NVIDIA's forecast or outlook, in a sense, was tepid, disappointed many. It doesn't look like they're going to sell a ton into China, at least if the Communist Party has anything to say about it, right? And CapEx is, maybe priced too high for the actual return that you're going to get on the AI investment.
Yeah, so the S&P 500 is usually close to all-time highs. About 50% of the time we're at all-time highs or within 5% of it. So it's a normal kind of state of being for the market.
It just goes up and to the right.
It tends to go up and to the right, and even when it's coming down quickly, the recoveries in the last couple of years especially have been very robust. That said, our long-term outlook for the equity market is that the returns are going to be lower than they have been over the prior 5 or 10 years. So investors who are used to 12 or 15% returns on the S&P 500, fueled by things like the secular AI story, we're looking at more like 6 to 8% as a realistic target. That's really where the valuation comes in. It's not going to tell you over the balance of the year are we going to get a correction. It's going to tell you over the next 5, 7, 10 years what kind of returns can you expect. And that's where we're getting cautious and where we think there's other places in the portfolio where people should be adding money.
Where else?
International is always a very tough conversation. We've had a better year this year. I think there's going to be more investors who are receptive to it after the year we've had.
Why is it so hard? Just because we're American?
Well, because of the underperformance. Why, put me in
historic
something
underperformance.
Historic underperformance. Yeah. So you're telling me to put some money in something that's underperformed almost every year. You have to go back to 2017 before this year, where you had a year where it outperformed. But I think we're also talking about alternatives. There's other ways. Private infrastructure, private equity. Private credit still looks like it has some room to run, and people who value income are going to get more bang for their buck in that kind of environment. But the large cap U.S. market itself has been the place to be, and that's very hard to kind of get people to pull money out of that and to diversify.
When you say international, do you mean Europe or Asia or just all of it?
So this year, China's been a huge part of the story, especially more recently in the summer. Earlier in the year, it was Europe and European banks, which is not a place that was a very popular investment destination. So we're diversified. We kind of look at it all as kind of one big pot, but it is an area where instead of looking just at the indexes, there are areas where people can outperform by, say, tactical asset allocation, country allocation. So there's more room for active management, we think, in international than there is in S&P 500.
Europe's already run pretty fast. I mean, the DAX up 20% year to date. The IBEX 35 up 28%.
And with the dollar, it's up even more.
Exactly. So, and that's my question. Does the dollar continue to come down? Because so much has been made about this 10% drop from the highs. But if you look at it historically, it is still incredibly strong.
It is still incredibly strong. To get incremental weakness in the dollar from here, I think you need to see more interest rate cuts from the Fed than what's priced in, and probably better economic performance and fewer rate cuts than what's priced in the UK, Europe, and some of the other central banks that have been cutting. That could mean that the dollar, in an environment where the U.S. macro picture is weakening, also gets weaker, which is not typical. Usually when growth is weaker, the dollar tends to be the sort of safe haven and we get a little bit of an increase. That could be one of the sort of special privilege aspects, the fact that the dollar tends to be negatively correlated to interest rates in the economy. That is one of the things that we could be seeing get lost.
Well, what if President Trump really is threatening Fed independence, which I doubt anyone,
Order filled.
Disagrees with? What if he starts to fire statisticians because he doesn't like the numbers, What if we start to run up massive deficits, like 6-7%, and then have debt climb $3, $4, $5 trillion over the next 10 years? Does that weaken the dollar?
It has weakened the dollar. So that's certainly one of the reasons you saw the dollar in the first part of the year. The U.S. sort of became this loss of a safe haven, less of an attractive investment destination, and so people are pulling their money out. I think you're making the point that all these things have happened and the dollar is still quite strong. I'd say that the incremental news for the Fed, whether Lisa Cook retains her spot in the FOMC or not, is that there's going to be a rate cut in September. Even the Fed leadership that's been sort of in opposition to Trump, or at least Trump's been in opposition to the Fed leadership, has kind of acquiesced to that. So in the near term, it doesn't change the path of monetary policy. There is this tail risk now, though, that we get a lot more rate cuts next year if you start to see that independence eroded and other central banks that have lost that independence.
By the way, rate cuts and still a rising long end, right? So like we saw in 2024, the Fed funds rate goes down and the long end yield continues to rise.
So I'd say where we're definitely seeing this is the long end is higher than it would be without all of these other risks, right? If you took away tariffs, you took away concerns about Fed independence, BLS independence, I think you would see, and you've seen it, the term premium has been rising, the 10-year would be closer to like 3.5%. Wouldn't be that low like it was in 2021, but we were probably paying 75 to 100 basis points right now for general risk around the long-term fiscal monetary outlook in the United States.
And what is so ironic is actually that's where the Treasury Secretary and the President want to see. They would love to see a 10-year under 4%.
And the concern is that loss of Fed independence doesn't just mean you're cutting rates at the short end. It means you could be monetizing the debt. Other central banks that have done this, the central bank has gone out and actively bought. And the U.S. did this during World War II. We were buying all of the Treasury issuance during this period where we had a huge expansion in debt. And that kept the 10-year Treasury at 2.5% throughout that entire period. And only as the Fed kind of pulled back from that practice did you see your interest rates rise in the 50s and 60s.
Really smart. Thank you so much, Brian, for joining us this morning. Brian Nick of New Edge Wealth. We thank him. Let's get you an update on stories elsewhere we're watching. Here's your Bloomberg Brief with Lizzie Burden. Hey, Lizzie.
Hey, Anne-Marie. I'll pick up where you left off with Brian there. Fed Governor Lisa Cook heading to court this morning to try and keep her job. Cook says that President Trump's using a phony pretext that doesn't amount to sufficient cause to fire her. Cook's lawyers suggested an unintentional clerical error may have been behind the mortgage dispute at the center of the clash between her and the president. Elsewhere, Russian President Vladimir Putin and Indian Prime Minister Narendra Modi are set to meet in China with President Xi Jinping on Sunday. The two-day summit will focus on the ongoing wars in Gaza and Ukraine. The meeting coming as US-India relations are in flux after President Trump imposed 50% tariffs on New Delhi over its continued buying of Russian oil. And Pop Mart's new mini Labubu dolls have sold out across China. The new dolls went on sale at 10 p.m. local time and all available inventory was gone before some people could even load the page fully. The dolls are expected to be in stock at Pop Mart's brick and mortar stores on Friday, and I'm sure Jonathan will be front of the queue. That's your Bloomberg Brief. Anne-Marie.
Thanks so much, Lizzie. Jonathan, no, but something new I just learned this morning. Matt Miller is a Labubu fan.
Well, I mean, my kids... Edna loves these Labubus, and when we were in Italy last month, she saw one at one of those trinket stores. I bought it right away and then figured out that it was a fake. So, but it was only like 20 euros.
Okay, all right. Oh, sounds like a lot, though, for a fake still. All right, up next in the program, back to some serious news. Trump versus Cook.
You had these mortgage receipts very clearly shown to the president, and he has the cause that he needs to fire this individual. We'll continue to fight this battle.
Ed Mills of Raymond James joins us next. You're watching Bloomberg Surveillance.
Order filled.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Order filled.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Good morning. Futures this morning a little bit softer, but of course this is after the S&P 500 yesterday closed at a fresh all-time high. So we're going into this PCE report, the Fed's preferred inflation gauge, with futures just a little bit softer. Your 10-year yield this morning up almost 2 basis points, 4.22%. Under surveillance this morning, Trump versus Cook.
Mr. Pulte has deferred those allegations over to the Department of Justice to investigate them. What I will say is that you had these mortgage receipts very clearly shown to the president, and he has the cause that he needs to fire this individual. He laid it out in the letter that he provided to her and to the public as well. And so we'll continue to fight this battle.
Here's the latest. A hearing is set for 10 a.m. Eastern this morning on Fed Governor Lisa Cook's bid to keep her job while her fight with President Trump plays out. Cook's lawyers say an unintentional, quote, clerical error may be to blame for the mortgage dispute over which Trump wants her fired. Bloomberg's Tyler Kendall joins us now. Good morning, Tyler. What's the latest?
Yeah, hey, Anne-Marie, good morning. Well, as you mentioned, Lisa Cook officially filed this lawsuit challenging President Trump's attempts to oust her as a Federal Reserve governor. And as part of this, she also filed what's known as a temporary restraining order. And that's what we're going to be really focused on today. This would allow Cook to keep her seat, potentially even vote in that September meeting, while the broader issue of her firing plays out in court. That hearing is set for today at 10 a.m. Eastern. And Cook's broader lawsuit, though, argues that President Trump violated a federal law that does allow him to remove a Fed governor, but only for cause. That's Section 10 of the Federal Reserve Act of 1913. And Cook says that this does not constitute cause. The problem with cause, and we're going to be talking a lot about this over the next few days, is that it's not explicitly defined, though historically has meant to mean malfeasance or a neglect of duties related to the job. And if you ask the Trump administration, they point to these allegations of mortgage fraud. You had the White House press secretary yesterday, both to reporters and also in a written statement, to double down on this idea that President Trump was within his lawful authority. However, Cook's lawyers say that this does not rise to that level of cause, and we should also say that at this point, these are only allegations. No criminal charges have been brought. As you mentioned at the top there, we got perhaps a preview of the defense that we could expect from Cook's lawyers. They say these allegations are not true, but that if there were any errors, perhaps this could be related to a clerical error, and that Cook had no intent to deceive anyone, and that also there was no harm done. That is a legal standard known as materiality. And Anne-Marie and Matt, I bring that up because we are expecting intent and also harm to be two of those factors that the judge weighs in this case.
Tyler, thanks so much for that. Bloomberg's Tyler Kendall in Washington. Let's continue this conversation with Raymond James, Washington policy analyst, Ed Mills. Ed, thanks so much for joining us this morning. I want to pick up on one point Tyler talked about, for cause. If this goes up to the Supreme Court, how do you think they will look to define that term?
It's a great question, and I think that there is the question about the for cause and also the question about, is the Federal Reserve somewhat separate, something of a distinct entity? Justice Roberts has already said that it is. I also think when we're looking at this for cause, because there has not yet been an indictment, there has not necessarily been a finding of the courts. When is it up to the president to be the judge and jury in the case? And when is it up to the traditional legal system to be judge and jury in this case? I do think that there are major questions that are being raised about Dr. Lisa Cook, but it is a due process that is afforded to her before I think a lot of those issues are settled here, Anne-Marie. So I think that President Trump has had a number of wins in the courts removing individuals. I think he just has a much higher bar here because it is the governor of a Federal Reserve System that the Supreme Court has already said is different in their eyes.
I wonder about the timing here, Ed, because I don't doubt that she can get an injunction to keep her in her seat by the time September 17th comes around, and she probably would vote for a cut anyway, so that's not going to bother the Trump administration as she leans dovish. But February is a much more important date because the governors are going to have to confirm the regional presidents, and that's when the Trump administration would probably like to have a stacked board. Do you think the Supreme Court can give the president what he wants before then?
Yeah, Matt, you're making some really important points here because it is, when I look at the judge that this court has, this case has been assigned to, it is someone that Biden put on the D.C. federal court here. She has already struck down previous executive actions by President Trump. It's fairly reasonable to assume that this temporary restraining order probably goes in favor of Dr. Cook because of that. But, you know, as you mentioned, I think it is also important to highlight that the monetary policy tilt of Dr. Cook versus what President Trump wants are more aligned than what you would think. So you're asking yourself, what is this about? Is it because he wants to have a 5-2 majority once Jay Powell steps down? Does he want that 4-3 majority as soon as kind of later this year, assuming that Mirren is confirmed? He already has Waller and Bowman from his first term. This here is that majority. The Federal Reserve on years that end in 1 or 6 have to kind of codify what goes on in the regional Fed system. And so does he want to fundamentally alter kind of the way in which the Federal Reserve works with the regional Fed presidents and how the FOMC is constituted? If that's really the question here, Matt, that's a bigger question, and I think that's where the market so far hasn't really been disrupted by this event, but could get really disrupted if they think that the Federal Reserve is fundamentally being altered in the way in which they set monetary policy.
Ed, I wonder if Republicans care at all. I mean, when you talk to people on the Hill, when you talk to Republicans on the Hill, are they concerned about Fed independence? Because any economist will tell you that a country with an independent monetary policy will do better over the long run than a country without one.
Yeah, so I think they are, but I don't know if they want to have a fight with Donald Trump. One thing that I've highlighted for clients at Raymond James for years now is that the Federal Reserve, well, we're not under the illusion that they're completely independent. We're not under the illusion that they're not influenced by politics, but it is the one area when you go back to Trump 1.0, when you look at what happened during Biden, where their own party has said no to some of the selections of the president. During Trump's first term, there was a number of governors that he
I woke up at 5 a.m. for 365 days in a row, and I'll never do it.
They banned this prayer tactic from TikTok, and it's not because it doesn't work, it's because it does. The elites don't fear your strength, they fear your prayers. God mode activated. Here's how it works. You were lied to your entire life. They told you prayer was weak. They made you believe that bending your knees meant surrender. But here's the truth they don't want you to understand. The strongest men on earth drop to their knees first thing in the morning, not because they're broken, but because they know who truly runs this game. You want to conquer the world, but can't conquer your mind. You want the throne, but you wake up like a peasant, no purpose, no order, no connection to something higher. And then you wonder why life beats you like it owns you. Let me explain something to you very clearly. God only listens to soldiers. He's not moved by your crime. He's not manipulated by your anxiety. He doesn't respond to emotional weakness. He responds to alignment. He responds to action. You show him faith through motion, not emotion. He sees you grinding with integrity. He watches how you move when no one's watching. That's when the blessings start to come. You think you're waiting on God, but he's already waiting on you. The door's open. You're just too distracted, too addicted, too soft to walk through it. You pray like a child, soft, unsure, begging for miracles you're not even prepared to receive. That's not faith. That's delusion. You pray for strength, and then you hit snooze. You ask for discipline, and then you eat junk and scroll TikTok for 4 hours. You plead for purpose, but never sit in silence long enough to hear God whisper back. And I'm here to tell you, brutally and honestly, you're insulting the power of the divine when you pray like a coward and live like a sinner. God didn't give you breath to waste it chasing dopamine. He gave you a war zone called life. And if you don't become a warrior, you'll die like a spectator. But listen carefully, because this is where the hope comes in. The second you align your habits with your prayers, your entire life changes. God doesn't need you to be perfect. He needs you to be consistent. Every morning you rise, hit your knees and say, I'm here again. I'm not quitting. I'm walking with you. Something happens in the unseen. You build a reputation in heaven. Your name starts to echo in spiritual corridors. You become a threat not because you shout, but because you obey. Power doesn't come from being loud. It comes from being aligned. And alignment requires discipline most men are too soft to embrace. There's a reason the elites don't want you spiritually disciplined. Because once you start praying like it's already done and moving like you can't be stopped, you become impossible to control. You're not distracted. You're not addicted. You're not scared of failure. You operate like a man who knows who walks beside him. That level of confidence is dangerous in a world that profits from your insecurity. The moment you become spiritually locked in, the matrix loses grip. They can't sell you emptiness anymore.
My husband used to ejaculate prematurely until this.
You know you don't have to come all the way to the pharmacy to get your scripts, right? There's a more private option.
Really? What is it?
The room was quiet, except for the steady tick of price moving across my screen. Futures were opening, and I had my plan ready. Entries marked, stops defined, risk calculated down to the dollar. Everything was in place. And yet, as the first wave of momentum hit, something inside me shifted. My breathing quickened. My hand hovered over the mouse. The plan said, wait. My instincts screamed, go. I clicked. Not because the setup was there, but because the urge was louder than the strategy. For a few minutes, it felt exhilarating. Green numbers flashed. Adrenaline surged. My mind whispered, this is it. This is the trade that changes everything. But markets don't bend to hope. Just as quickly, the move snapped back. What was green turned red. The stop triggered. I sat frozen, staring at the loss, not because I didn't know what to do, but because I hadn't done what I knew. That moment seared something into me. Knowledge alone doesn't save you here. The market doesn't punish ignorance nearly as much as it punishes weakness.
Most traders don't fail because they lack information. They fail because they cannot handle the truth. The truth is brutal, silent, and indifferent to the amateur, the hopeful gambler, comes to Wall Street with his mind consumed by a single intoxicating and ultimately ruinous question. How much money can I make? He is a hunter of gains, a dreamer of fortunes, and he is, by this very mindset, destined for the slaughterhouse. The professional speculator, the man who has survived the unforgiving crucible of the market long enough to learn its great and immutable laws, begins from the polar opposite. His first, his last, and his most obsessive thought is not on the potential reward, but on the ever-present and ever-threatening reality of risk. His primary question is always, how much money can I afford to lose? This is the great fundamental dividing line that separates the man who is built to endure from the man who is destined to be wiped out. The amateur is an optimist, a creature of hope. The professional is a realist, a strategist whose primary and most sacred duty is the relentless and disciplined preservation of his capital. For he knows a simple and profound truth. A speculator without capital is like a general without an army. He is no longer in the game. His opinions, no matter how brilliant, are worthless. His past victories are but memories. Capital is the lifeblood of speculation.
Order filled.
The ammunition in the long war against the market's uncertainty. To understand the operational philosophy of a master like Jesse Livermore is to understand that every single rule, every tactic, and every principle he ever espoused was built upon this one single foundational bedrock, the preservation of capital above all else. This was not merely a rule, it was his religion. This entire system of risk management, forged through a lifetime of both spectacular victories and soul-crushing defeats, is a science. It is a set of definite, logical, and inviolable laws for engaging with an inherently uncertain future. It is the speculator's only true shield against his own human fallibility. The principles that form this shield were documented with unparalleled clarity and insight by Edwin Lefebvre in the definitive chronicle of a master speculator's mind. A link to his essential work, Reminiscences of a Stock Operator, now with a unique, detailed chapter-by-chapter analysis from Max Davidson, is left in the description below this video. This new analysis is specially designed to make the timeless wisdom of the book powerfully relevant to the modern reader. With that, let us begin the clinical dissection of the 12 great principles of risk management that form the core of the Livermore method. First, preserve capital above all else. This is the prime directive, the great law from which all other laws are derived. It is the alpha and the omega of the speculator's creed. The first goal is not to grow rich, but to survive. The first victory is not a great profit, but the simple act of being able to come back and play the game the next day. The speculator's capital is his inventory, just as a storekeeper has shelves of goods. He would not allow a thief to walk in and steal his inventory. Why then would he allow the market, through his own carelessness or emotionalism, to steal his precious capital? The man who does not make capital preservation his highest priority is not a speculator. He is a gambler, a thrill seeker on a short and certain path to financial oblivion. He treats the market like a casino going for broke on a single hopeful bet. The professional treats speculation as a serious business, and the first rule of any business is to stay in business. This means protecting one's working capital with the ferocity of a mother protecting her young. Every decision, every trade, every thought must first pass through this one simple filter. Does this action increase or decrease the risk to my primary capital base? If the risk is too great, if the conditions are unclear, if the odds are not heavily in his favor,
Hey Jay, can you hear me now? Can you guys hear me now, everybody? Am I back? Is Stock Tiger back? Everybody, welcome back, guys. Great to see y'all again. Thank you for your patience. I didn't realize I had a problem with my computer. I restarted everything again. Now that actually ended up pretty quick. I like that. There's a couple more things I've got to get done. Bear with me, everyone. Mm-hmm.
Dreaming of a custom home that's exactly how you want it? At America's Home Place, we've been building homes your way, on your land, for over 50 years. We're not just another home builder, we're your home builder. Customizable plans? Check. Affordable pricing? Absolutely. Quality craftsmanship? Every single time. With over 50 convenient locations, we make it easy to bring your vision to life. Select all your design features at your local building center. Don't just take our word for it. From price to process to personalization, our customers love what we do.
I mean, from day one, it was a wonderful experience because it was like talking to family, basically.
We get asked all the time, who built your house? We're proud to say that it was America's Home Place.
Ready to build your dream home? Let's make it happen. Visit americashomeplace.com today and see why so many families have trusted us for decades.
Order filled.
America's Home Place, the custom home builder you can trust.
What are calls and puts? What is the process of exercise and assignment? How are option prices derived? What are the option Greeks? These and many other questions are answered in free options education provided by the Options Industry Council, OIC. OIC delivers its educational content through courses, webinars, podcasts, trading tools, videos, and more. One way OIC provides its unparalleled learning experience is through OCC Learning. This e-learning platform is designed to help investors discover practical education about the responsible use of exchange-listed options. Within the platform, investors will find a catalog of available self-paced options courses, complete with knowledge checks and quizzes, and a comprehensive library of podcasts and videos. All content is created by experienced options professionals. The best part, it's all free of charge and available right now. Click below to sign up for access.
Let me begin with a question. Have you ever sat in front of a chart, staring at the candles, asking yourself whether you're actually making informed decisions or just gambling with your money? Every trader knows that feeling. We all chase that dream of landing the big trade, the one position that wipes out weeks of frustration and justifies all those hours of watching the market breathe tick by tick. But here's the real challenge. How do you actually prepare for that trade? How do you know when the odds, not hope, are finally tilted in your favor? That's the exact problem Peter Pham sets out to solve in his book, The Big Trade. This isn't another collection of recycled chart patterns or trading cliches. Peter Pham, an experienced investor and writer known for challenging conventional thinking, wrote The Big Trade with a sharp focus, to cut through the noise. Published by Wiley Finance, the book is lean, practical, and refreshingly direct. Nothing like the heavy, jargon-laden volumes most of us associate with finance. What sets this book apart is its relentless focus on probability. Instead of chasing predictions or looking for the next big indicator, Pham encourages traders to think like statisticians, not fortune tellers. The premise is simple but powerful. Consistent trading success doesn't come from knowing the future. It comes from preparing for repeatable conditions where probability stacks the odds in your favor. Why review this book? Because today's trading world is filled with promises of guaranteed systems, highlight reels from self-proclaimed gurus, and endless debates about whether technical or fundamental analysis reigns supreme.
Order filled.
Amid that chaos, The Big Trade feels like a breath of fresh air. It boils everything down to a clear framework: probability over prediction. It's a message that speaks to both beginners and veterans, reminding us that the real edge isn't about being perfectly right. It's about executing high-probability trades with discipline. Personally, this book struck a chord with me because it addressed a trap I kept falling into during my early years. Maybe you've been there too. I'd rack up a few wins, get overconfident, and then give it all back on one oversized emotional trade.
Hey, what's up, guys? I found this beer left over from some campers and I'm totally wasted.
Have you guys seen this vlogging Yeti online? I'm going to teach you how to do this exact thing in under 5 minutes. Click the link to envato.com. Head over to the Gen AI video section. You can type in a prompt and then you can click on Enhance with AI. That will actually create an AI generated prompt that makes this video basically turbocharged. Make sure you click on the audio tab and then select Generate. Boom, bada, bang.
The new cooking show is going to be off the chain. Totally off the chain.
Order filled.
TK4, TK51, TK904. You are clear to contact the tower. All preparations for this historic moment are complete. Turkish 904, 60306.
Order filled.
Led the way in Europe with the simultaneous landing of 3 Turkish Airlines aircraft at Iga Istanbul Airport. One of the most complex operations in aviation history was successfully carried out. This moment belongs to Turkey. And with 3 aircraft taking off in perfect sync, another milestone was reached. We draw our strength from Turkey and continue connecting the world.
they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What are you seeing?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk the line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the four walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss the close, live every weekday.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. Equity futures this Friday morning, a little bit softer as we head into the all-important PCE inflation data coming out at 8:30 Eastern time. We'll have full coverage of that right here on Bloomberg Surveillance. But of course, all of this with a grain of salt because yesterday the S&P 500 had a fresh all-time high. Under surveillance this morning, new duties taking effect today.
The de minimis rules, just as a bit of a reminder, $800 is what the U.S. has said you don't have to previously have to go through customs duties, but that accounts for about 4 million packages each day. So a lot of these businesses will never have had to go through a customs process. So it is likely to introduce quite a bit of friction. Any sort of change in both the friction in terms of the time of processing, but also the additional cost can really mean the success or really pivoting of those businesses going forward.
Here's the latest. President Trump is bringing an end to the de minimis exemption, which allowed merchandise shipped to the United States valued at $800 or less to be tariff-free. Everett Eisenstadt, the former NEC deputy director, writing, a number of countries, including Mexico and the European Union, are suspending postal package shipments to the United States. This is a significant change for online shoppers and retailers. Everett joins us now. Everett, thank you so much for joining us this morning. I feel like politically this was a long time coming, having covered the Biden administration and the Trump administration. But how big of a deal is this going to be when it comes to trade with the United States?
Well, this is going to be a big deal. As you noted, this has been coming for a long time. There's been some concern over the use of de minimis and that it had been used to circumvent U.S. customs laws and to bring in illicit products. There's all kinds of debate around this. There was all kinds of debate about how to manage the program. Ultimately, President Trump said, look, we're not going to do that. We're just going to stop this program, and we're going to put in place to collect these duties. A lot of companies and consumers have become reliant upon this process, have been able to order products from overseas, bring them in with very little duties and fairly rapidly. And that's going to end today. And I think you're going to see a lot of households are going to be surprised at both the costs and the complexity involved in getting their products from overseas.
Well, we have one of those individuals sitting around the table this morning. Matt was just telling us how he has 2 helmets coming from Japan, I think one from the European Union, that he might get hit with this tax because they were just under $800. Given that's the case, do you think there's going to be a lot of pushback and potentially we could see this administration, I'm not trying to be cute here, but taco?
No, I don't think so. Not on this one. This one, there was bipartisan support for revising de minimis for many, many years.
Filled.
And I actually had the honor of working on this statute when I was on Capitol Hill as the chief trade counsel. So I recall why we made the modifications at that time. The idea was to relieve, the Customs Service of the burden of enforcing small packages, bring them up to do some more complex enforcement mechanisms. And there was a trade-off, right? And to do that, the shippers had to meet certain criteria. The packages had to meet certain criteria. It was doing very, very well. As you noted, many packages have come in, but the frustration over the program has been long brewing and bipartisan, particularly as it related to China, which has been terminated quite some time ago, but now it is global. And there's a lot of companies and customers and even foreign postal services out there struggling with, well, how are we going to implement this? What does this mean? Who's going to collect the duties? What is the duty going to be? And the helmet analogy you made is just one example of many stories I suspect we're going to be hearing over the next several weeks.
Well, we've been talking about the fast fashion industry, which is notoriously bad for the environment and horrible for the labor, that creates those products. That's why this has, I think, bipartisan support, as Anne-Marie was saying earlier. But are you worried that postal systems are going to be experiencing real disruption here? Are we going to see some trade issues in terms of shipping because of this?
No doubt. I'm quite confident of that. I mean, when you make a change of this magnitude, it's global. It's going to take some time to sift it out. It's going to take shifting resources around the world to come into compliance with these new requirements. So, yeah, it's going to be burdensome. It's going to take some time. That doesn't mean it won't work, but it's going to take time. You can't make a change like this overnight and expect everything to continue to move just as smoothly as it is. And your example on these fashion shipments is exactly one of the cases in point, where you have an industry that was built up around this concept that really, I'm not even sure is will be able to resolve itself and survive as it did in this new environment. So it's a pretty important change, and one that's going to filter through pocketbooks and companies for quite some time.
Everett, I want to transition to autos here, because you have a fantastic resume for that. You worked for President Trump at the NEC, and then you worked for General Motors, which makes some of my favorite gas engines, a 6.2-liter naturally aspirated V8, as well as some of the best EVs out there. The EV Sierra is an incredible truck. What do you think about the cancellation of EV tax credits from the big, beautiful bill? Because clearly these automakers have had to invest billions in making EVs, and electric is going to be the powertrain of the future. So what happens when we turn off that incentive?
It's so huge. And, that's just one part of that greater complexity when it comes to electric vehicles. It's not just a tax incentive. It's what are the emission standards? What are the fleet requirements? There's all kinds of different reasons that a company will choose to produce an EV over, say, an ICE or an internal combustible engine. So the tax credit's meaningful. It's important. It's not determinative, but some of the other elements are. And so the president's also modifying the mile per gallon emission rates. He's looking at changing some other things. So it's really giving mixed signals to the industry. And for industries that thrive on long-term predictability, massive capital investments, looking at timeframes, 3, 5, 6, 7 years out, this is really, really difficult to plan in this environment. And you made a really good point. The EVs around the world are surging. They're primarily because China is subsidizing the industry and pushing out a lot of product that they cannot get into the United States. But the EV is going to become the dominant vehicle in the future, and the United States has got some work to do to catch up to that.
We also have Everett problems when it comes to tariffs, because we're giving a 15% flat rate to Toyota and Honda out of Japan, and General Motors and Hyundai in South Korea, but Ford has to pay big taxes on aluminum, big taxes on imported parts, big taxes on Chinese magnets, to the point where it costs more to produce those vehicles in Dearborn than it does in Seoul. Does that make sense to you? How do they solve that?
That's an anomaly. We're going to have to see how that's resolved. But I doubt there was anybody who planned that out and said that's exactly how we want this to land. I think some of these pieces are moving at different paces at different times, and sometimes bring them all together into kind of a coherent package is very, very difficult. It is going to be tough to produce in the United States, but at the same time, the U.S. market is really the only market around the world where car companies can sell their vehicles profitably. You know, there's a lot of things we can do to make the system here more efficient. There's a lot of things we can do
Order
to help our
filled.
domestic manufacturers, but we need to take those into account.
Former NEC Deputy Director Everett Eisenstadt. Matt, I was waiting for you to bring up cars. Took you 50 minutes into the 6 a.m. We're back with another Bloomberg Surveillance next.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates, it complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Inflation is very, very important to
Order
the market.
filled.
The inflationary backdrop for the US right now is as anywhere near as egregious as some commentators would say.
I am more worried that the rise in inflation caused by the pass-through of the tariffs, it could end up being more persistent.
I expect a Fed that will be constantly data-driven and may have to pause to recalibrate where the economy is moving.
Ultimately, we are going to have to see the data. It's going to be very data-dependent.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
From New York City for audience worldwide, good morning. This is Bloomberg Surveillance. Today, I'm Anne-Marie Hordern alongside Matt Miller. John and Lisa are off. You can get a sense it is a summer Friday, especially a Friday before the Labor Day long weekend. Doesn't mean we don't have an important Friday ahead of you. 8:30 Eastern, that's where we're going to get the all-important PCE inflation gauge. Of course, this is what the Fed looks at. And then at 10 o'clock, Matt, we're going to get this hearing on Governor Lisa Cook. So when it comes to what is going on between data and also personnel and policy, it is all happening today in terms of Washington, D.C. First up, though, when it comes to the inflation gauge at 8:30, do we even need to care? Governor Chris Waller yesterday basically said that he's on team, and he put in air quotes, transitory when it comes to the tariff impact on inflation.
Right, because we're expecting to get PCE, core PCE at 2.9%. Now, to him, that's 2, because he sees it as transitory, right? And he is already invested in cuts. He may even see a need for a jumbo cut, depending on what happens with the labor market. But I think the University of Michigan data could be interesting in that we get inflation expectations that people on the Fed really consider important. I know it's the U of M.
Who considers important? It was Governor Waller, who basically felt like wrote Powell's speech at Jackson Hole, who sat around this table and said that survey, because it is highly politicized.
Yeah, but they break it down so you can see what Republican expectations are and Democratic expectations are. And for a long time, they were going in opposite directions, but now they've started to come back to. You see what I'm doing here? You seen top here?
Let's go into what Governor Waller said, because I think you brought up a good point, opening the door potentially for a jumbo rate cut. I don't believe that a cut of larger than 25 basis points is needed in September. That view, of course, could change if the employment report for August, which is due out a week from today, points to a substantially weakening economy and inflation remains well contained. If we get a big downside on the labor market report, do you think that puts 50 on the table?
Well, I'm not sure about that because we're not yet pricing in a full cut. Right now, I think if you look at the WIRP function on the Bloomberg, it's only about 85%. And even when we did get those downward revisions, which are horrible and showed over the last 3 months, only 35,000 jobs were added each month on average, we still didn't get up to a full 50, but it definitely pushes us in that direction.
Let's take a look at where markets are this morning. No drama, as Jonathan would say. We are a little bit softer on futures, but of course this comes as yesterday a fresh all-time high, 6,500 yesterday on the S&P 500. 10-year yield up almost 2 basis points, 4.22%. Matt, you've been bringing us back to this point, which I think is really important. If individuals in the market really concerned about Fed independence, wouldn't this yield be much higher? And that story is going to come into focus today at 10 o'clock.
Yeah, I think there must be some technical answer to why we haven't seen yields rise higher. You guys had Gita Gopinath on yesterday, and she was saying, well, everyone must have faith in Fed independence. That must be what it is. But I'm not sure everyone does have faith. So maybe it's a liquidity story?
I think people are just waiting for the courts to decide. And that's going to be a process. Coming up on this program, Katie Kaminsky of Alpha Simplex, a stock slip ahead of key inflation data. Krishna Guha of Evercore with the future of Fed independence hanging in the balance. And Gene Munster of Deepwater Asset Management on the AI race. We begin this hour with stocks drifting lower ahead of core PCE data. Katie Kaminsky of Alpha Simplex Group writing, quote, equity market sentiment has been drifting more positive as we seem to have passed peak tariff uncertainty. The potential for Fed rate cuts has also boosted equity market trends. And Katie joins us now. Katie, it feels like there's a lot of risk potentially still in this market, but markets keep grinding higher. Another fresh all-time high yesterday. Why? What's behind this?
Well, I think the truth is the markets have been steady as you go this month. And as I noted, that the uncertainty is just not, moving the markets around as much as we saw before. In general, things have been drifting more positive. I think the rate cut possibility has really boosted the market this month. And you're also seeing positive moves across a much broader set of equities, which is also encouraging. We also see good news out of Asia and some positive news that kind of continues to be a good drift into the end of the summer, I would say.
Katie, I want to ask you about AI, about NVIDIA, about chips, because you studied electrical engineering, because you have your PhD in operations research at MIT. What do you think about NVIDIA, especially in light of the fact that the Chinese Communist Party seems to want its companies to buy no more chips from the U.S. producer? And considering their earnings report yesterday, the outlook didn't seem that great.
This is a good point. I was actually kind of surprised because the market seemed to shrug off some of the not as good news for NVIDIA. I think some of it may be sort of overall optimism for the space, but you are right. There are headwinds against NVIDIA, particularly China, which is such a big part of that marketplace. So I think, truthfully, we don't know enough yet to understand really how those dynamics will play out. And trade wars have also made that much more complicated, much more unclear. But it's true that there's a buzz, and the direction for AI has been continually strong. So I think, the market still thinks that we'll sort this out, and that, these are sort of the stocks that we need to hold going forward. I think the broadening of the market this month helped a little bit, because if you think about how concentrated we are in that theme, it is a risk factor for most investors.
I was lying in bed last night thinking about the all-time high that we hit on the S&P and the fact that NVIDIA was down, right? A $4.3 trillion company that's worth like 10% of the index is down. And so I got up and I logged onto Bloomberg and put in the RRG function, relative rotation graph, on the S&P, and I see that consumer discretionary is coming up. And you are seeing a rotation out of like these Mag 7 or Great 8 companies into the rest of the 493. Does that continue?
I think so. I mean, a lot of that narrative really comes from the rate
Order
cut
filled.
Expectations. And I think that is really where that's a sector, anything outside of the top 7 has really struggled for quite some time. I think the biggest data point for me is taking a look at how well the Russell 2000 has done this month versus the NASDAQ. And that's quite a spread, possibly up to 5%. So you're really seeing, this pivot and rotation, and that's a positive sentiment for U.S. domestic equities. So I think that could be something that could provide some breadth when we have a lot of focus on AI and a lot of focus on tech.
Are you surprised about that rotation, given the fact that we now, for the most part, have final tariff rates, and that's going to hit some of these companies in a big way?
Yeah, that is actually the thing that I'm the most concerned about. And I think the de minimis news today and sort of thinking about that, a lot of factors are inflationary right now. So eventually this is going to hit a large number of companies. We have seen some indications in the fixed income markets where, you're seeing short pressure on long-term bonds and really kind of weak signals. So to me, that's one of the first places you'll start to see some potential, putting your view in the market. If you think inflation is a problem, then you stay away from long-term bonds. So I think that's the market I'm following first as a potential indicator for where that eventual stress may come.
Do you think long-term bonds are concerned about inflationary pressures or about Fed independence?
I think both. That's a good question, because Fed independence definitely affects the inflation narrative as well, because with a less independent Fed, maybe long-term implications are less in focus. And frankly, with lots of different aspects of the trade policy being inflationary in nature, you're eventually going to see that in long-term cash flows. And I think we'll continue to follow those long-term yields. They have actually gone up more this year than short-term yields. And I think that's a place where people naturally go to, express their view on inflation. So I think we'll have to watch those and see how they develop, especially if we get a big rate cut at some point later this year. That could really spur a potential trend.
You have noted that September is bad. Another great function on the Bloomberg terminal, SEAG Go. If you look at seasonality, over the last 30 years, September is the absolute worst month for stocks. Do you think traders and investors take this into consideration when they're trading stocks?
I mean, I think they definitely do. I think one of the challenges is, and we see that in our space, August tends to be a tricky month for trends, for example, and that hasn't been the case. So I think there's always exceptions. I think this year is particularly notable because we've had the quiet period. We're coming out of the recent Jackson Hole summit, and basically September is a time where I think people reassess the data and they say, wait a minute, how do we put this together to get into the end of the year? So it is possible we could see some correction of this very positive risk sentiment that we've seen.
When they reassess the data and we look towards September, do you been paying attention to the CPI print given what Governor Waller said last night?
I would definitely say I'm still paying a lot of attention to it because a shock in that will still matter a lot. But I do think we're seeing more and more evidence that the Fed is shifting towards lower rates. What I'm more concerned about is how extreme that is. And if it's much more aggressive, that's what could actually spawn a much bigger spike in inflation. So I do think that you still watch it, but obviously this narrative has made that particular number much more difficult to read and understand what that means, how that's gonna move the markets, I mean.
Katie, thanks so much for your time this morning, and happy Labor Day weekend to you. Hope you enjoy the long weekend. Katie Kaminsky of Alpha Simplex Group. We're going into, Matt, it's a long Labor Day weekend.
Filled.
But there's a lot of data that you have to get through today, as well as this overhang of what is going on between this fight between Governor Lisa Cook and the White House.
Yeah, and you probably don't want to be holding risk assets into this long weekend, especially as we're coming up to September. When we were talking to Nick at the very top of the show, he pointed out that equity markets typically rise, right? Up and to the right is the trend. And if you look at the seasonality, only 3 months over the last 30 years have averaged losses, and September is the worst one, down 0.8%.
I'm looking at it right now. Thanks so much for sending me that function. Matt Miller with the functions this morning. We're getting you an update on stories elsewhere. Here's your Bloomberg Brief with Lizzie Burden. Hey, Lizzie.
Hey, Anne-Marie. Federal Housing Finance Agency Director Bill Pulte has filed a second criminal referral against Fed Governor Lisa Cook. The new referral relates to a property in Massachusetts following a complaint alleging that Cook fraudulently listed homes in Michigan and Georgia as her primary residence when she obtained mortgages in 2021. Elsewhere, Brazilian President Lula plans to hit back on Trump's 50% tariffs. Sources telling us here at Bloomberg that Brazil is starting the process to retaliate against the tariffs. Brazil's government has 30 days to assess a potential response. And Jannik Sinner has continued his strong start at the US Open with another straight set win. Women's number 2 seed Iga Swiatek struggled a bit but battled back to advance to round 3. And the singles title hopeful American Coco Gauff won in the second round, setting up a potential showdown with Naomi Osaka. And that's your Bloomberg Brief. Anne-Marie.
Lizzie, thank you so much. US Open fever right now in New York. You actually missed last night to come join me this morning.
My boys, my dogs, invited me, and they had actually front row seats, but I said no.
You're committed to
I'm
Bloomberg.
doing surveillance with Anne-Marie Porter. Yeah.
All right, well, hopefully you can get to go before the US Open ends. Up next in the program, a battle over sufficient cause.
You had these mortgage receipts very clearly shown to the president, and he has the cause that he needs to fire this individual. We'll continue to fight this battle.
What does for cause mean? Krishna Guha of Evercore joins us next. You're watching Bloomberg Surveillance.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Good morning. Welcome to Bloomberg Surveillance. We are waiting for, of course, this morning, that all-important PCE report, the Fed's preferred inflation gauge. Forecast to show excluding food and energy rose 2.9% in July from a year ago, fastest pace in 5 months. But guess what? Governor Christopher Waller says he thinks inflation right now, or the tariff impact on inflation, is, quote, transitory. So you have to ask, does a hotter than expected PCE take a rate cut really off the table when it comes to September? Under surveillance this morning, we'll be debating that all morning. But under surveillance this morning, another debate, a battle over, quote, sufficient cause.
Mr. Pulte has deferred those allegations over to the Department of Justice to investigate them. What I will say is that you had these mortgage receipts very clearly shown to the president, and he has the cause that he needs to fire this individual. He laid it out in the letter that he provided to her and to the public as well. And so we'll continue to fight this battle.
Here's the latest. A hearing is scheduled for 10 a.m. Eastern this morning on Fed Governor Lisa Cook's bid to keep serving while her battle with President Trump plays out. Cook and her lawyers argue an unintentional clerical error may be to blame for the mortgage dispute at the center of her dispute with the President of the United States. Bloomberg's Tyler Kendall joins us now. Good morning, Tyler. So what should we expect at 10 a.m.?
Yeah, hey, Emery. Well, there is a lot to dig into, but the first matter of business is going to be the fact that Cook is seeking something known as a temporary restraining order. That would allow her to be reinstated into her seat, potentially vote at that September meeting, while the broader issue of her firing plays out in court. And Cook's lawyers argue that if she's not able to be reinstated during this time, it would cause irreparable harm, not just to Cook, but to the Federal Reserve as an institution as they head into their next rate cut meeting. Now, importantly here, Cook's lawyers are arguing that President Trump violated Section 10 of the Federal Reserve Act, which allows him to fire a Fed official if there is sufficient cause. And I bring up cause because this is going to be this one issue item that we pay very close attention to as this plays out in the coming days. Cook's lawyers say that there is not sufficient cause here, but as you mentioned, they did offer a potential defense yesterday when they filed these court documents, saying that these allegations of mortgage fraud are not true. But if there are any errors, perhaps it was a clerical error and that Cook did not intend to deceive anyone and that she did not cause any harm. I bring up intent and harm because those are two factors that the judge is expected to weigh. Anne-Marie and Matt, if you ask the White House, they are doubling down on their pressure campaign against Lisa Cook, saying that this is well within President Trump's right to fire her.
Tyler, thank you so much. And of course, you'll be there the entire morning outside the court. That expected to happen at 10 a.m. Let's continue the conversation. Krishna Guha, Evercore ISI Vice Chair and Head of Central Bank Strategy, joins us now for more. Krishna, thanks so much for joining us this morning. Do you have an understanding of how the court will define for cause in this case?
So I'm not an attorney. I'm an economist. And so I certainly don't want to mislead your viewers by offering legal expertise here that I don't have. What I will say, of course, is that the for cause protection and the idea that this establishes a high standard before a president can consider removing a Fed official is central to our understanding of how central bank independence operates in the U.S. So there's a lot at stake in this litigation.
Krishna, you're head of central bank strategy at Evercore ISI, as well as vice chairman. And then I wonder what you think about inflation. We're looking for PCE to come in at 2.9%. We had core CPI at 3.1%. We had core PPI at 3.7%. And yet, Chris Waller says it's close enough to 2. Do you agree?
I think what's important here is that the inflation that we really care about is the second round inflation. It's the risk of inflation persistence. And no one, as a matter of theory or practice, thinks that the central bank should be directly responding to the first round effect of tariffs like a tax mechanically on prices. The issue is, what pressure does that, if any, impart to underlying inflation dynamics? That's the second round question. And so I'm less focused on the individual month's inflation pass-through from tariffs. That's the first round mechanical stuff. But I am trying to assess what the risks are of inflation persistence and balancing those against the risks to the labor market. I actually think the conditions likely have been met for an initial cautious step down towards a more neutral rate. But I also think that the Fed should be very careful about signaling what follows from here and making it clear that it'll take the time it needs to assess the incoming data and judge whether, for instance, by December, the case for another cut has or hasn't been met.
Well, what if the Fed didn't, Krishna, take the time it needs? What if the Fed wasn't as thorough? What if the Fed was stacked with Trump appointees who just wanted to do the president's bidding? Would you buy then 10-year treasuries? I mean, does 420 make sense to you?
So I am concerned about the outlook for central bank independence, and I'm concerned about the Cook affair in that context. Obviously, if the president is able to push Governor Cook out, then that accelerates the time frame over which his nominees may acquire a majority on the Fed board. And that's, as you know, that then raises questions as to whether we might see an unprecedented effort to deny certain Reserve Bank presidents renewal, again, without cause. But also that the move against Cook based on allegations that have not yet been charged or proven in court or established by any kind of quasi-judicial process essentially weakens the protections that future Fed governors, by the way, including the people who President Trump puts in place, will have in the event that they have to make decisions in the future that this or a future president doesn't like. So this does absolutely all bear then on how you think about the outlook for policy and what may happen to bond yields. I personally feel that the market is likely underpriced for the risk that we could see a more of a break in Fed institutional practice and potentially the conduct of monetary policy over the next year or so as the Fed board transitions and as the administration attempts to acquire more authority over who gets to determine when for-cause conditions have been met.
Bill Dudley and Lael Brainerd agree with you. We spoke to both of them this week in terms of the market reaction. What kind of, I guess, yield should we see, say, on the 10-year if the market was really taking into account that this could be more of an erosion of Fed independence?
So I think what you see at the moment is that the bond market is not really quite sure how to interpret, first of all, the actions relating to Cook. And secondly, that the market is wary of shorting bonds aggressively in an environment in which, per Governor Waller yesterday, we could discover soon that the last 3 payroll months were negative, right? Once all the revisions are in. These are not necessarily the macroeconomic conditions in which you would want to ramp yields. But I would say that if, and we're still dealing in a probabilistic and uncertain environment, but if we were to get further confirmation over time that the Fed is losing independence, and if this resulted, as historically generally it has, in a central bank becoming more structurally dovish, then I do think at some point you would likely see a substantial response in the bond market. The issue, of course, is when and under what circumstances would that happen. I think it's hard to predict and certainly hard to say with any confidence that adverse bond market reaction would come immediately.
Krishna, really smart stuff. Thank you so much for joining us this morning. Krishna Guha of Evercore ISI. And he brings up a good point, Matt. There's really two different things the market has to focus on. One is these allegations, and that needs to play out in its own due process. And then, of course, this question of whether or not the Oval Office is exerting way too much pressure on the Fed.
Right. Well, I think the Supreme Court is going to say that the president, because he was elected to run the country, is going to be allowed to decide what cause means. In terms of the allegations, I mean, is that really going to play out?
Well, it likely, potentially will. If there's an investigation, that's something we're going to have to
I
watch
wonder what the penalty
and
is
cover.
for that kind of
The
error.
The intent is going to be very important. Coming up on the program, Margaret Brandt of Premier Estate Properties on concerns of a wealth flight from New York City. Plus, Lizzie Burden with your morning movers, including Caterpillar. Look at the stock this morning, warning of a larger than expected tariff hit, down 3%. You're watching Bloomberg Surveillance.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. Welcome back to Bloomberg Surveillance. It definitely is a Friday morning with Matt Miller and myself, with John and Lisa off today. Markets this morning very much just softer a touch because yesterday, Matt, we had, of course, an all-time high, 6,500 on the S&P 500. Bond market, really, as you've been saying, shrugging off any concern there is in terms of Fed independence. We're looking at a 4.22% on the 10-year yield.
Yeah, also interesting you don't see more weakness in the euro considering what's going on in France right now. I thought the market would be more concerned, but I guess the dollar weakening at the same time puts them in the same situation.
2 hours away from the cash open, we want to get you some morning movers this morning with Lizzie Burden. Hey, Lizzie.
Hey, Anne-Marie. Let's start with the losers this time, shall we? We go to Caterpillar. Those shares down about 3% in the pre-market. This after the company warned that it's expecting a tariff impact of up to $1.8 billion this year, higher than it had guided earlier this month. And of course, it's important because this is one of the world's biggest makers of machinery for mining and construction, so it could have knock-on effects for those industries. Next up, we turn to Ulta Beauty, up more than 3% in the pre-market. The beauty store chain issuing a raise and a beat, even as it's warned of a potential pullback from customers. And that's interesting given that the demand for cosmetics has really held up so far this year, despite the economic uncertainty. So maybe the cracks starting to show there. Finally, Alibaba, its US listed shares up nearly 3%, more than 3% now in the pre-market. The Hong Kong listing, though, had dropped into the red. But American traders focused on its reported surge in revenue from China's AI boom, even if it saw a drop in profit because it was aggressive competition with the likes of JD in the e-commerce space. But also interesting to note, Anne-Marie, the Wall Street Journal writing that it's planning to create its own AI chip to try to help China fill the Nvidia void. So we'll keep an eye on that. Anne-Marie, back to you.
Thanks so much, Lizzie. That last story, Matt, incredibly important. Front page of the Wall Street Journal this morning. Alibaba creating this AI chip to fill the Nvidia void.
Yeah.
This comes back to the question that even if the U.S. government is going to allow even the highest level chips into the Chinese market, will China want their firms to keep buying Nvidia, or do they want them to get addicted to their own hometown heroes and their own technology?
Yeah, I think the Chinese Communist Party has, on a couple of different occasions, given a signal that it does not want companies in China buying NVIDIA's H20 chips. And the interesting thing is, historically, China has had no problem just stealing IP from other manufacturers, international manufacturers, and making clones of that technology. And I don't see why they wouldn't do it this time. It's going to be expensive. It's going to take a lot of a lead time, but it's definitely going to happen.
Well, that's been the whole concern on why they've put export controls on a number of these NVIDIA chips. On our radar this morning, so what else we're watching? A federal judge set to hear Fed Governor Lisa Cook's bid to temporarily block President Trump's from firing her. Cook's lawyers are suggesting a, quote, clerical error is behind the mortgage dispute that has Trump pushing for her dismissal. So this is going to happen at 10 a.m. time. Likely, many people expect there to be an injunction. Likely, that means she can continue working. And Matt, to your point, that means she will get a vote in September at the Fed meeting. Right. And I think her vote is going to please the president. So it's in a sense, it's ironic, if I'm using that term correctly, that the president is going after a dove. Right? I mean, right. And also, if they decide to stack the Board of Governors and take out some presidents, they'll go after Goolsbee first, and he's a dove as well. So. Yeah, so it's looking very dovish, at least for 2026. I guess that's the take. What really is going to be the question for this case is what constitutes for cause. I keep going back to what the Supreme Court said in May. The Fed is a private, semi-private, quasi-private entity. They're inoculated from any political pressure. Does that stand? Because and you look at what the Federal Reserve Act, it doesn't really define what for cause means. Right, and no, and it's completely unprecedented. And this is why I think after watching Bloomberg surveillance every morning, that the Supreme Court is going to defer to President Trump on this issue. They have done that in so many cases this year, and I can't imagine why they wouldn't in this case as well. Say that the president is the one who gets to decide what for cause means, and he knows a thing or two about falsifying business records. And mortgages. He's a debt guy. Elsewhere in Washington, D.C., the CDC has a new acting director after President Trump fired former head Susan Monterez. She'll be replaced by Robert F. Kennedy Jr.'s current deputy, Jim O'Neill. The White House saying Monterez was fired because she was not aligned with Trump's agenda. And around the world, Russian leader Vladimir Putin and Indian Prime Minister Narendra Modi are set to meet in China with President Xi Jinping Sunday. The summit comes as U.S. India relations are in flux after President Trump imposed 50% tariffs over New Delhi's buying of Russian oil. And this has really sparked a huge debate, especially in India. Recently, we had on Bloomberg TV Peter Navarro, and he actually called the war in Ukraine, quote, Modi's war, because of how much crude India has made off of this war. They're bringing in Russian cheap crude, they're refining it and basically selling it back to places Russia used to sell to, like the European Union. And what we've seen, though, with this trade fight is Modi leaning in more to the BRICS. And even Xi Jinping sending a secretive letter to Modi saying maybe we should start relaunching of bilateral ties. So I think this summit's going to be really interesting.
I mean, this is your wheelhouse, right? The oil patch, Putin, and I mean, I might call it Merkel's war. I think it's so fascinating that the EU has financed Moscow to such an extent and did nothing when Putin moved to annex Crimea and continues to buy refined oil products from countries like India, despite the sanctions that they put on.
Not only that, I mean, China, of course, is the biggest player here when it comes to imports of Russian crude. But Europe is also still directly buying from Russia. It's interesting you say that about Angela Merkel, because that was Trump's big fight in 1.0. He was vehemently against Nord Stream 2. And his whole point of NATO, why are we paying into something if you are going to continue the purchase of Russian crude?
No, I was in Berlin, and his energy secretary, Dan Brouillette, made a number of trips to try and convince the Germans to buy LNG from the U.S. instead of funneling money directly to Moscow, and they refused time and time again.
Trump won. They called it freedom molecules. That was the branding of trying to get more LNG into Europe. All right, we're going to take a different turn today, turning to real estate. Political uncertainty in New York is pushing a number of wealthy New Yorkers to Florida. New York Governor Kathy Hochul even saying, quote, I don't want to lose any more people to Palm Beach. We've lost enough, when she was asked about raising taxes. The migration driving up demand for homes in West Palm Beach. Joining us now is someone that knows a lot about that is Margaret Brandt, real estate advisor of Premier Estate Properties. Thank you so much for joining us. You're in New York.
Yes.
So this is exciting. You have seen this financial migration. Can you explain to us what's different now? Because we really saw a lot of this under COVID.
Of course. First of all, thanks for having me. I'm a New Yorker. I grew up here, and I think what's different this time is we're seeing a lot of organic momentum. First it was with the 2017, tax implications in New York, followed by COVID. And then after COVID, we sort of saw this change where people were opening their businesses in Palm Beach, and it was sort of like Wall Street South from 2022 to 2024. And now in 2025, Mamdani kind of seems, as the likely winner of the New York City mayoral race, kind of seems to be spurring further interest, specifically in the summer, which is typically a slower time for us, in July and August. But we're seeing some tailwinds.
Most Palm Beachers are coming up here.
Of course, yeah. But just, we're definitely seeing some tailwinds from this New York City mayoral race.
So when it comes to Palm Beach specifically, and those New Yorkers coming down, are they still keeping a foothold in New York, or are people really selling everything in New York and fully relocating to Florida?
So what's different now, as opposed to even like 5 or 6 years ago, is, there's been billions of dollars. I mean, Steve Ross, the king of New York, is now, throwing billions of dollars into schools, into condos. And so we sort of have the infrastructure into schools. We have the infrastructure now to accommodate full-time moves. So to answer your question, what I'm seeing is that a lot of the big hedge funds are moving their businesses to Palm Beach. They're establishing residency. They're establishing Florida for tax purposes as well. And they're moving their people there because it's really sort of become this mini Miami in downtown West Palm. So it's a place of productivity and not a place where people go to retire. We have a very good friend and client who runs a major hedge fund, and he polled his people, and 30% of them were open to a move to Palm Beach or Miami. So I think that's an interesting statistic, that 30% were open to making the move to Florida.
It's interesting you bring up West Palm, because I feel like through the years, I've seen just every time I go down there, there is a new construction site.
Yes.
Big time businesses. So are prices going up? Are people being priced out?
I think that's false. But what I will say is that I look at Palm Beach as either a lifeboat or a hedge, right? And in terms of a lifeboat, you don't want to wait till the ship is sinking until you come and reach out for help. And then in terms of a hedge, I mean, you guys, it's not rocket science. You follow stocks all day here, right? And everyone always says, oh, the prices couldn't go up further, or there will be a crash, there will be something where the prices stop. But if you look from 2017, to COVID, to the, businesses moving down there, this Mamdani thing is just another spur. So I think that the proof is kind of in the pudding and where the prices have been going. And the pricing remains strong because we're a small island. If you look at Palm Beach Island and Manalapan, it's a very small piece. We're not Miami. Miami is big and spread out, but Palm Beach specifically is very small, which keeps the prices strong.
I kind of wonder about the social aspect. Last time I was down there was pre-President Trump, so it was just like the Breakers and the Bath and Tennis Club. But
yes.
Now that all of my friends from the Upper East Side have moved down, like Bill Bouquet is open up down there,
Yes.
Lulu is open up down there, so you've got all these sort of Manhattan social staples that have moved to Palm Beach. What else do you see down there?
I mean, Palm Beach is really happening. I mean, all the New York City stuff, all of the, exercise classes, Sweet Green, like downtown West Palm is kind of what Tribeca was 10 years ago. You know what I mean? So it's very similar. And I think we're seeing Hotel Venetas, they're opening up. So they're the same owners of Hotel du Cap. We're seeing a lot of fun restaurants, and it's a scene. It's a scene, and it's a lot of fun. It's no longer your retirement place, I'll tell you that.
Well, Matt brought up the president. I went down there one weekend and with him, part of the press pool. And I will say, Palm Beach residents definitely get annoyed by the road closures that happen with President Trump. But it does feel like at the same time, he's almost like the hometown hero. Mm-hmm. Do you find Palm Beach to be Republican, or is it a bipartisan city? Is it this place that only the GOP...
Are there any Democrats?
Are there any?
Good question.
I mean, here's what I think. I think that because there's such a New York City connection to Palm Beach specifically, it is mixed. I wouldn't say that it's exclusively red because there's a lot of New Yorkers, and New York is mixed, right? So there's blue and there's red. However, President Trump is most certainly, I would say, like an influencer. He's probably the biggest influencer, and there are a lot of people that want to be close to him, whether it's personal family, friends, whether it's people that admire him politically. Before the election, we saw sort of a Trump bump in the estate section, which is that area surrounding Mar-a-Lago. Before the election, there was probably 6 properties that had sat on the market for 6 months or more. Right after the election, all 6 of them went within a short period of time. We were involved in all of them, I think.
Proximity to power, meaning...
Yeah, proximity to power. So, I mean, we base our, you have to look at facts, and what actually happened is he did create kind of a boom, and that's trickled in even past the election. And now we're sitting here in August, and there's definitely, it probably leans red, but there is blue.
Good to know.
Yeah.
Margit Brandt, thank you so much for sharing some of that insight with us this morning. Margit Brandt of Premier Estate Properties. Let's get you an update on stories elsewhere we're watching this morning. Here's your Bloomberg Brief with Lizzie Burden.
Hey, Anne-Marie. Federal Reserve Governor Christopher Waller expects the central bank to cut rates by 1/4 point at its meeting next month. Waller said that with underlying inflation close to 2%, market-based measures of longer-term inflation expectations firmly anchored, and the chances of an undesirable weakening the labour market, he anticipates additional cuts over the next 3 to 6 months. And elsewhere, Nike is planning another round of layoffs as part of its efforts to get back to growth. According to an internal memo seen by Bloomberg, Nike said, quote, "The moves we're making are about setting ourselves up to win and create the next great chapter for Nike. The cuts will impact less than 1% of Nike's corporate staff." And finally, former MLB All-Star Mark Teixeira is running for the U.S. Congress. The 3-time All-Star who won the 2009 World Series with the New York Yankees announced that he's going to seek the Republican nomination in Texas's 21st congressional district. The 45-year-old is aiming to succeed Representative Chip Roy, who's running for Texas Attorney General. And that's your Bloomberg Brief. Anne-Marie.
What do you think of that, Matt? Baseball player.
Wait, is Texas Attorney General, is that Ken Paxton?
Ken Paxton, yeah.
So he did mortgage fraud too? Is that the allegation?
The reports are that he has 3 homes listed as his primary residence, and he's also renting some out that are not supposed to be rented. But I'm asking you about the baseball player that might go to Washington.
I have tried and tried to care about baseball. You know, from years of watching Tom Keene, I've been motivated to go and watch the Yankees, the dreaded New York Yankees.
Order filled.
To go even to Citi Field and watch the Mets, but it's just way too boring.
Dreaded New York Yankees, that's where we cut it off. Up next in the program, the AI boom.
The godfather of AI, Jensen and NVIDIA, continue to dominate. And I think this is just a further validation tech stocks go higher. The boom's just starting. This just shows the next stage of adoption is actually just starting.
Gene Munster of Deepwater Asset Management joins us next. You're watching Bloomberg Surveillance.
I think with the new world reorder, it means that there will be regional clusters of excellence. There will be regional clusters of great companies. And so it's okay to be number two, because you could be number two in every single region and still command that premium. Because today we talk about AI, we talk about data, we talk about processes that's going to be very specific to industries, specific to countries, specific to regional challenges that needs to be built and addressed. And therefore, the good of it is that now it's not just going for that one company and overpaying for that company until the returns goes to zero. It's actually about finding regional champions, which could also be huge category leaders for us as funds as well. And I think it's actually good for the world to have multiple pots of excellence that can be localized to its own needs.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Good morning. Welcome to Bloomberg Surveillance. I'm Amber Herdern alongside Matt Miller. We are counting you down to the all-important 8:30 data print of PCE, then 10 o'clock in Washington, D.C., potentially some fireworks when it comes to what is going on with Governor Lisa Cook. Will she get this injunction to be able to sit on the Fed board, continue to do her job, and maybe even vote for an interest rate cut in September? Futures this morning are soft. We're on the red, down 0.3% on S&P 500 futures. But of course, we hit a fresh all-time high yesterday. Under surveillance this morning, the AI boom.
The godfather of AI, Jensen NVIDIA, continue to dominate. And I think this is just a further validation tech stocks go higher. The boom's just starting. I mean, if you look at these numbers, especially when you factor in what China is going to be, I mean, Jensen talked about 50 billion, 50% type growth number. This just shows the next stage of adoption is actually just starting.
Here's the latest. The Nasdaq sitting just below all-time highs, propelled by Wall Street's big bets on AI, despite lackluster results from NVIDIA. Gene Munster, managing partner at Deepwater Asset Management, is pushing past sell-side noise, writing, "The bottom line is we're still early in the AI build-out, and growth next year will be higher than most expect." Gene joins us now for more. So, Gene, You're pretty comfortable, it sounds like, with what's going on in NVIDIA's growth, even though it is slower than what we've seen in the past.
Order filled.
Are you concerned, though, about where policy is going in regarding NVIDIA's access to China?
The simple answer is not concerned about policy. I think that that's going to kind of right itself in the next few weeks. Within their January quarter, they're going to see a big return in their China business that's, of course, not factored into the street estimates. My concern around China is more structural long-term, is that the Wall Street Journal this morning is reporting that Alibaba now is coming out with a new inference chip. Of course, we've heard Chinese leadership cautioning not to buy some of the H20s after what have been perceived as some insulting comments from the White House in terms of the types and the caliber of chips that they're being allowed to buy. All this in the background of what is clearly the most important topic for nations is where their position is within AI. And so when I think about the China opportunity, I believe that it's a huge opportunity for NVIDIA over the next year, 2 years. But I think that it's going to be increasingly competitive with the likes of Huawei, with the likes of Alibaba. Interestingly, that new Alibaba chip is reportedly able to work with the CUDA, which is the essentially the operating system around NVIDIA's chips. That's kind of part of the fabric that holds that very intense tech economy together for NVIDIA. And so the simple answer is this, is that it's going to get a lot better for NVIDIA related to China. I think if you take the perspective of 5 years from now, China doesn't want to be held accountable to owning U.S. chips, and Chinese leadership is making big investments. So it's going to get more competitive there longer term. Doesn't change how I feel about the AI trade. If anything, it actually makes me more confident about it. But I think that's the kind of the scope and the trajectory around China.
When it comes to China and U.S. policy, the CFO had this to say regarding that 15% that the U.S. government says that NVIDIA has to give back to the government for the export license. I don't have to do this 15% until I see something that is a true regulatory document. So is it your understanding that basically the H20s can go to China right now and NVIDIA doesn't have to legally give the U.S. government the 15% the president said he had a handshake deal on?
It's my understanding that the licenses actually haven't been issued. Jensen made a comment about the timing of when those licenses are going to be issued. I think that separately, they still don't have clarity from the White House around the 15%. Why that matters for NVIDIA investors is it's still unclear about how that they're going to account for that 15% revenue share, and separately how they're going to think about potential price increases to offset that. And so that piece, as you are appropriately pointing out, kind of an important vector. And I think when you kind of put this whole mix together, I just want to take a step forward into what is going on with NVIDIA here. The stock is trading off after a very favorable quarter and what, in my estimation, was a better than expected guide. And I think part of that is related to some of the uncertainties that you talked about, timing of these licenses, timing of the revenue share. There's another piece that kind of vectors into this, which is NVIDIA's businesses, because China is getting a little bit smaller, is increasingly dominated by several companies. The top two account for just under 40% of revenue. I estimate the top six are 60%. And so there's this China and customer concentration that is a derivative of the China conversation. And so it gets quite complicated. And I just take the approach, at Deepwater, we take the approach of what's actually happening, what's the bigger picture, what's going on. And ultimately, we still think we are very early, second inning in AI. 3 months ago, I said we're in the third inning. And so I think we're actually earlier than what, as this is progressing. So really important to understand what's going on with these licenses and how the U.S. government, but ultimately the bigger picture is what's happening with AI demand over the long haul.
Well, and what's happening with return on investment here, Gene, because we're looking at trillions of dollars spent to build up this infrastructure. You are one of the most famous tech analysts out there, and you've been through it all, right? You were there for the dot-com bubble burst when everybody was spending way more than they needed to, laying fiber for the money that they made in the years following. Are we seeing something similar play out now?
I think the big difference, first of all, is this return on investment question is valid because just the massive amount that's being spent. The best example of this, of course, is what's happened with Meta's business, is that this is a business that was growing kind of in the mid-teens. They pushed more for better targeting with AI, and now you're having a business that's consistently growing in the basically 20% range, their advertising business. I mean, remarkable at scale how AI is impacting Meta. So from my perspective, is just that one piece alone, I think, is a good evidence. One, as I think back about what happened 25 years ago, there was a piece that we knew that the internet was going to be something big. There's a lot of commonalities. I think that when it comes to what's going on with AI right now, I think that you do have examples of what's going on with Meta about real, tens of billions of dollars of incremental revenue because of this, which we didn't see back in .com. I do want to just add one connection point to what happened 25 years ago and where we're at today, too, is there's this kind of ongoing conversation about the bubble. Where are we at? Are we in a bubble? We're not in a bubble. Looking back 25 years ago. And ultimately, we're not in a bubble. We will get to a bubble. I think that the market still has a couple more years to run here, and it's going to be a big bursting of the bubble at that point.
Not in a bubble yet. Gene Munster, thanks so much for your time this morning. Gene Munster of Deepwater Asset Management. Coming up, another hour of Bloomberg surveillance. Michael Purvis of Talbacking Capital Advisors. Dana Telsley of the Telsley Advisory Group. Ryan Wang of HSBC and Zachary Griffiths of Credit Sites. Of course, also coming up in the next hour, we will get the all-important inflation gauge that the Fed watches, PCE, coming up at 8:30 Eastern. Keep it right here on Bloomberg Surveillance.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
If you look at what's driving the market, and is it a very small group of companies? Absolutely. That's very concerning.
What we're seeing in the large cap space is, at least on a short-term basis, a lot of good news is priced in.
Everybody at this point is functioning under the fog of uncertainty.
Markets tend to dislike uncertainty in any form.
There is a sneaky Uber bull case out there lurking.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Very good morning to you from New York City. For our audience worldwide, this is Bloomberg Surveillance alongside Matt Miller. I'm Anne-Marie Hordern. It feels like a very sleepy Friday. It's the Friday before Labor Day. But, Matt, we have some pretty important data coming up today. 8:30, in just 30 minutes, we are going to get the core PCE, which, of course, this is something the Fed is very focused on. But how focused are they going to be on this data point, given the fact that last night, once again, we heard from Governor Chris Waller, and he said you can basically look through any tariff impacts when it comes, Matt, to inflation.
Yeah, and I want to point out also that we did hit all-time highs on the S&P 500
I was going to get to
yesterday. We are looking at a real seasonality issue because September is historically the worst month for stocks out of all 12. And right now, valuations are starting to look stretched again, right? In terms of the S&P 500, PE is at 25. So that's very high considering the average is around 17.
Yeah, and basically everyone is still buying into this equity market because the Fed's going to cut rates.
Right. Well, exactly. You had Christopher Waller saying, 3% is near enough to 2 for him because he's back in team transitory. He literally said that.
With air quotes. I think it's important, we have to say, I'm back on team transitory with air quotes.
Right. Nonetheless, he used those words, which I find fascinating. Of course, a lot of economists will look through, as you mentioned, tariff caused inflation the same way they would look through maybe sales tax caused inflation. But sales tax doesn't go up 5, 6, 7x in one month.
Coming up in the program, Matt, another hour, Michael Purvis of Tal Backing Capital Advisors as stocks pull back from the record highs we had yesterday. Ryan Wang of HSBC reacting to today's key inflation data, and Zachary Griffiths of Credit Sites expecting a 50 basis point cut at the Fed's next meeting. We begin this hour with stocks pulling back ahead of key inflation data, as we've been talking about. That's coming out now in 30 minutes as the Fed also has a battle of independence, and that is ramping up. 10 o'clock today, that'll be key. Michael Purvis of Tal Backing Capital Advisors writing, the more Trump pushes the Fed away from independence, the greater the upside risk becomes to back-end yield. Michael joins us now. Michael, thank you so much for joining Matt and I this morning, especially ahead of the all-important PCE report. When it comes to this question of Fed independence, you think that there is a Fed-Trump put at this moment?
Well, I think the question people have to get into is if Trump really does, get his team in there and really sort of has a firm, leaves a firm imprint on monetary policy, which basically is going to come down to what I think you could describe as sort of unnaturally lower rates, right? At least given the context of historical Fed response functions, right? Then you have to really question, well, what's going to then happen, right? And I think you're going to start seeing is a more exaggerated sense of what we have been seeing this summer, which is, look, we have seen the September rate cut locked. It started getting locked after the bad jobs report. It got locked again after Jackson Hole last Friday. And yet the 10-year has only bid marginally, right? Typically, as you get into a new cutting cycle, all the rates travel lower, right? You saw that a year ago. You saw that back in the 2018 into 2019 cutting cycle. there where the 10-year yield went down as basically as much as the 2-year yield did, as the Fed did that pivot, right? So the Fed is pivoting to some degree here, but if you look at the 30-year yield, that's actually higher. Those yields are higher now than they were before the bad jobs number. If you look at the Fed's calculation of term premium, the ACM term premium, that has been persistently, stubbornly high.
But Michael,
and the 10-year
can I just
yield
jump in
has only
here?
been, yeah.
Is it that high if you're that concerned with Fed independence? Is 4.9% in a 30-year really that high if people are really concerned about not having an independent central bank?
Well, no, exactly. I mean, I think that's the point here. I think the question is that if he is successful in getting Cook out of the Fed and he's successful at really putting in sort of an uber dovish Fed, I think that you have to again get to the next question: is what is he going to do with that? Because if take a theoretical scenario where we get 200 basis points of cuts in the next 6 months, right? On a Trump-defined Fed, right? What's going to happen to the 10 and 30 year? They're going to go higher. Inflation expectations in the long run are, in my view, going to go a lot higher. And I think there's broader questions about, term premium, and then you're layering on hot monetary policy on top of a tax bill that is fiscal stimulus, on top of relatively low unemployment, right? So that's a recipe for all sorts of reasons to be, expect higher term premium, higher back-end yiels. That we know Bessent doesn't
Michael,
want.
can I ask, why aren't any of the president's advisors telling him how this works? Surely Scott Bessent knows that when you attack Fed independence, the term premium is going to get higher. So the Fed can cut rates, but the 10-year is going to be higher. The 30-year is going to be higher in terms of yields. And the president wants rates down, at least in part, so that he can pay less on the outstanding debt. But he's going to end up paying more on the outstanding debt when he goes after doves like Lisa Cook.
Not to mention the fact that the stock market cares a lot more about the 10-year than it does about the 2-year. Real estate assets care a lot more about the 10 and 30-year than they do about the front end. Right, all that. Right, the economy cares more about the 10-year. Right, so this is where I'm going with this whole. Where I think the plan is. Bessent has been very clear early in his term that he wants. He's really trying to get the president focused on the back end. So play this out, right? If rate cuts, particularly if they're quote unquote unnatural rate cuts, are not the answer to lower back end yields, then I think it's got to be. He's going to rebuild the plan may well be to rebuild the balance sheet, right? We've done that after the GFC. We've done that after COVID. We did it during World War II. Well, we didn't do exactly balance sheet build, but we did do a form of yield control during World War II, right? So there is precedent, and I don't know how else they're going to get 10-year yields lower if they get a very, very dovish group of individuals running the Fed in there, right?
What are you looking for on PCE today, Michael? Because, Waller seems to think 3 is 2. But it's 50% more, obviously. And inflation is headed in the wrong direction. So it seems to me odd that the Fed would cut, especially that they would cut 50 basis points as inflation turns around and goes higher.
Yeah, look. The news we got from the July, since the end of July, was that the NFP was 35,000 a month.
And so his invasion didn't go as planned.
Weak
and so now he's stuck.
ISMs.
He's kind of like riding a tiger that he can't get off. Because if he gets off the tiger, he says,
services
now
ISMs
it's
were
peace. One of the things that really brought down the Soviet Union in '91 was tens of thousands of pissed off veterans that came back from Afghanistan saying, what the hell did we sacrifice all that for? That helped overthrow the government. I mean, he's lost hundreds of thousands of dudes. So he's got parents, siblings, spouses. So Putin got fed, obviously, bad intel. And so his invasion didn't go as planned. And so now he's stuck. He's kind of like riding a tiger that he can't get off. Because if he gets off the tiger and says, now it's peace. One of the things that really brought down the Soviet Union in '91 was tens of thousands of pissed off veterans that came back from Afghanistan saying, what the hell did we sacrifice all that for? That helped overthrow the government. I mean, he's lost hundreds of thousands of dudes. So he's got parents, siblings, spouses, and wounded veterans that gave a lot with nothing to show for it. If he can't show a win, he's toast. It's an exceedingly uncomfortable position for him, I'm sure. So Putin got fed, obviously, bad intel, and so his invasion didn't go as planned. And so now he's stuck. He's kind of like riding a tiger that he can't get off. Because if he gets off the tiger and says, oh, okay, now it's peace. You know, one of the things that really brought down the Soviet Union in '91
to sort of think about a September cut. I actually think Powell would be inclined to do a cut regardless of whether Trump were president or not, just based on the data. Would it be a very hawkish cut? Quite possibly.
Everyone is talking about this hawkish cut, Michael. So basically what you're saying is one and done.
Well, I'm saying one and a lot of conditionality. We don't know what the fall is going to be, but I think there's a really ugly scenario that could be unfolding where if these trends of, to Matt's question about the PCE, look, the boogeyman of the inflation is really not the tariff. It's just really about that super core print we got in July was not pretty, right? And that's something that has a little bit of inertia away from all this tariff news, and that could be really much more troubling. Everyone's been so focused on the tariff-related inflation, and I think there's a very understandable debate about how long that is and what it really means. But the services stuff is something that's been, sort of lurking in the background for some time, and particularly on Supercore. So if that comes in, if Supercore comes in this morning and in the next CPI as being sort of unfriendly, I think we're going to see a really, really interesting fall.
How difficult, though, is a hawkish cut for Powell to talk about in the press conference when this is what Waller had to say last night? As I stand here today, I anticipate additional cuts over the next 3 to 6 months, and the pace of rate cuts will be driven by the incoming data. He is squarely looking at the labor market.
Yeah, I think he's also squarely looking at a job interview too. But
he's running.
but look, I mean, he's look. I think the jobs data has definitely, based on the July numbers and the revisions, right, was clearly weaker. I think the question we have to also recognize is that there is a lot of volatility up and down in some of this data, right? And I think there's a lot of understandable questions about labor force contraction and all that kind of stuff, right? I mean, if the immigration policies are constricting labor slack, right? I mean, I think that is one of those pro-inflationary dynamics that we're going to, the Fed's going to have to contend with there. But look, I think there's a wide range of scenarios that can play out after the September meeting, which may cause Powell to really reverse and pivot again, right? Again, I'm putting political noise to the side here, right? But what if we get strong inflation, in September and October after that cut? And the jobs data is sort of okay. What is Powell then going to do, as we approach the meetings at the end of the year? Is he going to do no cuts? Is he going to even maybe signal a hike back to where he was? This job is hard without having the president of the United States, be pushing on you every day, right? So there's a lot of strange currents in the data, and I think Powell's just kind of reading them as they come, right? There, but I think he's going to have to navigate that. And Waller's thing aside, he's being pretty clear about his views there. But again, people were very clear a year ago that the economy was definitely going to weaken. They had to get in front of the neutral rate as fast as possible. They gave us 50 cuts last September. 50 basis points of cuts, and that marks the lows across the curve of interest rates over the last 12 months. So, it's a very, very resilient economy, but there's a lot of complexities in the inflation data and also now the employment data.
Michael, thanks so much for joining us this morning. Michael Purvis of Talbacken Capital. Let's get you an update on stories we're watching elsewhere this morning. Here's Lizzie Burden. Hey, Lizzie.
Hey, Anne-Marie. President Donald Trump has revoked former Vice President Kamala Harris's Secret Service protection. Vice presidents normally receive 6 months of protection after leaving office, but according to CNN, Harris's protection was extended for an additional year by President Biden. Trump's directive to cancel Harris's protection goes into effect on September 1st. Elsewhere, the TSA is taking a heel turn on some long-standing practices at airport security checkpoints. For the first time in almost 20 years, passengers no longer have to remove their shoes and run them through X-ray machines. Officials are also now signalling that they intend to ease the rule limiting containers of carry-on liquids to to just over 3 ounces. And over to sports, the Phillies' Kyle Schwarber joined an exclusive club last night, becoming just the 21st player ever to hit 4 home runs in a single game as the Phillies took down the Atlanta Braves. As for the New York teams, the Mets fell to the Miami Marlins 7-4, and the Yankees won their 5th straight game, defeating the Chicago White Sox's 10-4. And that should be my brief. Anne-Marie.
Lizzie, thank you so much for ending on the Yankees. Matt is here laughing. I promise I didn't do that.
It's just so, I mean, God love Lizzie Burden, right? A Scottish lass giving us the baseball scores. Like, you've lived in England. They don't know how baseball works.
No, they're more into cricket.
Yes, I love cricket also, but
you don't like baseball?
Well,
cricket's even longer than baseball.
Yeah, but cricket
That's a weird take,
it's more
Matt.
of a drinking game, right? And baseball is just dead boring.
Baseball is not boring when you're rooting for the right team, which is the New York Yankees. Up next, the morning calls as Wall Street turns bearish on Marvel, plus Dana Telsey of Telsey Advisor Group as the de minimis exemption ends today. That's next. You're watching Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The longer end, we've seen rates climb higher and higher and higher because there is this sense that whatever dovishness the Fed is going to undertake now, whether it's just the people on the FOMC becoming more concerned about the labor market or because the Fed is losing independence and is going to become more dovish, but we're going to have to pay for that sometime in the future with higher interest rates down the road. So that is where that we call it zoo steepening because it's a bull market at the front and a bear market at the back.
Tells Brian Nick of New Edge Wealth this morning. Actually, a viewer just wrote into me saying, you said it's a sleepy Friday for August, but don't jinx it. But that's what we do have this morning. Equities are pulling back just slightly, but we had a fresh all-time high yesterday on the S&P 500. And of course, markets are just over 10 minutes away from getting the important PCE inflation data. And then everyone else potentially could then go enjoy their long weekend. Time now for the morning calls. First up, Bank of America downgrading Marvel to neutral, seeing incrementally higher uncertainty. That stock is getting hit, down more than 14% this morning. Next up, Morgan Stanley raising its price target on Ulta Beauty to $600, seeing room for upside given the industry's minimal tariff risk. That is up more than 2.5%. And finally, JP Morgan raising its price target on Gap to $32, seeing a buying opportunity due to the post-earnings sell-off. And now we're going to stick with retail. Investors digesting a slew of earnings from the sector and their signals about the economy. Dana Telsey, the CEO of Telsey Advisory Group, saying the tariff impacts on EPS and margins are being managed and price increases have not been fully passed on to customers. The bulk are expected to be visible in the third and fourth quarter. And Dana joins us now. Good morning.
Good morning.
Very busy earnings season. When will we see the full impact of the tariffs?
I don't think you're going to see the full impact of tariffs until heading into the fourth quarter. And it's on a select group of merchandise. And frankly, when you think of the newness that's coming in, particularly on the apparel side, perhaps you'll see more of the price increases on the newer products, which you may not even know because they never were issued before. So that's some of the bulk of it. What we've seen as we've gone through earnings season is you haven't heard that it's been the full impact. And keep in mind, we've had a price tracker on 80 items since April. And what we've seen on iconic items, whether Levi's 501, Barbie dolls, we haven't seen big increases across the board. It's very selective with those price increases.
You know, the administration has long argued that this is just like a sales tax, and it's only just a one-time price hike. But the thing is, these tariffs trickle in over months and months and months, and the manufacturers try and hold back price increases when they can. So they take some into margins, they pass some to suppliers. I feel like we're going to see a step up of prices over time.
That's what's expected. The expectation is it will step up, and you're right, it's a third, a third, a third. A third look to diversify their sourcing, a third look to share the cost with manufacturers, and then a third of the headwind is passing the prices on to the consumer, which we not have fully seen yet.
What do you think about, Jonathan Levin wrote a column for Bloomberg Opinion yesterday pointing out that we have higher PEs on some of these retailers than we do on NVIDIA. If you look at the forward PE for Costco, it's 52 times earnings, and NVIDIA is only 40. Why are investors willing to ascribe such a value to these retailers?
Frankly, for something like a Costco, where you have annuity from continued membership, you don't have a lot of people not renewing their membership, the fact that you still have the opportunity to grow your unit base globally, that it captures such a wide customer. So I've got great value and prices, I've got a sticky customer base that's only growing, and I still have the ability to open more units. And don't forget Kirkland's. They've got private label that's of value that can expand to many more categories.
Fantastic products. I'm always impressed by Kirkland products.
Are you a big Costco shopper?
Yeah, love it.
Do you have
It's
a
so much
Costco
fun.
membership?
Of course, I have the executive membership.
Wow, you're definitely a different person than I remember you a few years ago. So who's doing well in this environment? It's the Costcos, it's the Walmarts, because they're big and they're able to really mitigate these tariff concerns.
What about off-price? Look what you just saw at Burlington, a 5% same-store sales increase. Look at Ulta Beauty, very strong. That whole beauty category, there's newness in beauty and it's driving demand. What about the category of denim? And we've seen denim look at Levi's, they talked about denim. On the category side, I mean, Gap did well with denim, both at Old Navy and the Gap brand. And you're seeing in some of the intimates areas, the rebound of Victoria's Secret and the turnaround with the inflection point in intimates. Give consumers something that's new and different, they'll open their wallet.
But no denim intimates, I hope.
There's no denim intimates.
Oh my God. When it comes to, oh man, Matt.
TMI.
You've got to have good jeans, right?
This is the whole American Eagle debate. Is there, or do you see a push in retailers of trying to go to this cultural Americana?
Order filled.
You know what? I think it is the cultural, what's part of the conversation. So you look at the Cat's Eye group that basically has the Better Denim campaign for Gap. It's driving up tremendous number of views. You take a look what was just signed by Abercrombie, whether it is the NFL partnerships, whether it's the Dallas Cowboys. How do you remain relevant and expand your audience?
I saw that. Brittany Mahomes is now going to be the face of Abercrombie. Travis Kelce, and I think this came out in the day they announced their engagement, is doing
American Eagle.
A partnership with American Eagle. You do have to have a celebrity endorsement tied to your brand?
It's working. I mean, you look at Beyonce and Levi's, and the effectiveness of being able to capture the number of their audience and their clubs. You're part of their club now.
By the way, I was shocked the other day when I looked at a TJ Maxx stock chart over 5 years. They've absolutely crushed it. And I'm guessing that like a Burlington and a Ross Stores and these discounters are all doing very well. What do you like the best? Like if you could own a couple of retailers, only a couple of retailers, which would they be?
So when you think of best in class in my world, you talked about Costco. Look at TJX. They are best in class. They have category strength. It's very impressive what they've done. You take a look, frankly, what Ulta Beauty is doing in the Beauty Unleashed plan with the new CEO. Well, she's promoted CEO, but it's working, and they're capturing a wider customer base. It's compelling. You look at brand leaders, and brand leaders like a Tapestry, like a Ralph Lauren, a Levi's, they're effective because they capture the consumer. And you think about what can be enhanced. Take a look at Bath & Body Works, watching that very carefully for the speed at which they're transforming their business model.
Why Bath & Body Works? Is that just like soap bombs or?
It's soaps and sanitizers, but what about 40 million loyalty members? 40 million loyalty members who are going there on a regular basis, that matters. And today, capturing that customer is key.
Here's the key.
To me, that sounds like the consumer has
Order
too much money.
filled.
Well,
not yet.
Well, it depends. Some people like, special bath bombs and things like that.
And also there's a trade down.
Here's the big question, though, in the luxury market, especially makeup. Do you think consumers will buy a $160 lipstick?
Very expensive, more expensive than the Hermes $80 lipstick or Chanel $50 lipstick. Yes, there will be people who buy it because it's the entryway to, instead of getting the $2,000 or $3,000 Neverfull bag, you're going to get a $160 lipstick and you'll get a case that says LV.
Wow. You really think that people are going to buy this?
You can't surpass what a brand can generate with a lifestyle offering.
And for Matt, if you don't know, this is Louis Vuitton. They're introducing a new lipstick, and it's $160.
I'm surprised you haven't bought that lipstick.
I'm a lip gloss girl.
Okay.
That's what it is. Dana Telsey, thank you. Thank you so much for joining us. Dana Telsey of Telsey Advisory Group. But it's a great point, Matt, when you talk about what's going on with the Walmarts, the Costcos, the TJX. They're still doing well. And a lot of that has to be from the upper level income bracket, almost trading down or being willing to go out there and want to find better price points.
Yeah, I mean, I look at the TJ Maxx total return, 167% over the past 5 years. So they really have rewarded investors that made that bet. I still think, like a Bath & Body Works, if you've got money left over after going to the grocery store, after paying your car payment, after forking over the cash you need to for your GLP-1s, to go to Bath & Body Works, you just have too much money.
Well, we'll see about that. I think a lot of teens like it, and you have daughters, so one day you might be that dad in the mall at Bath & Body Works. We're minutes away now from the all-important core PCE print. Ryan Wang of HSBC joins us to react. Keep it right here on Bloomberg Surveillance.
Order filled. Order filled.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, yet ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jelana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning. Welcome to Bloomberg Surveillance. We are just 20 seconds away from the all-important PCE data. And going into that, markets are a little bit softer on S&P 500 futures, treading water into this all-important data. Fed Governor Chris Waller told us yesterday, look through any tariff impact on inflation. He's squarely focused on the labor market. And yesterday, S&P 500 hit an all-time high, fresh record high for that data that's just crossed. Let's get over to Mike McKee. Hey, Mike.
Good morning. Well, the data has not just crossed. It's coming over a little slowly this morning from the Bureau of Economic Analysis, but we're just getting this here. The personal income increased 0.4%. Personal consumption expenditures increased 0.5%, which are exactly what was expected. Now we've got the inflation numbers, and they are as expected. A 0.2 rise in the headline and a 0.3 rise in the core on a year-over-year basis. No change in the headline, 2.6%, and the PCE core index rounds to 2.9%. Now I got a note from Omar Sharif of Inflation Insights just before we got these numbers, and he said at 2.9%, which would be the highest since February, is still not necessarily a sign that inflation is picking up significantly. So we'll keep an eye on that. The other number we got was the advanced goods trade deficit comes in at 103.4, I think, here, and at 103.6. And basically, this is a significant widening because we were at 84.9% in June, 84.9 billion in June. So a 7.1% increase in imports and a 0.1% decrease in exports. So, Anne-Marie, it looks like maybe we went back to the pre-tariff effort to bring in a lot of goods in July before the president put the final tariffs on.
Certainly it does feel like that pull forward effect was happening when you look at some of these numbers. But when it comes to the PCE, Matt, no surprise here. All bang in line when it comes to the core PCE.
Yeah, all exactly in line. So it's all the more interesting that you see the two-year yield. It had risen up before this number came out to 364.40, and now it's
trading story, and his trading story that involves other members of his family making money as well. So outstanding. Can't wait to talk to him. He'll be with us later on in the show. In the meantime, let me send it around the horn and introduce my fantastic co-host. First, the man who cannot sit still, which is evidenced by him on the screen right now, Mr. White T himself, Swiss Nick. Nick, good morning.
Morning, Matt. Good morning, Trade Nation. Good morning, Miriam. Yeah, dudes, I have to walk. I have to get my 12,000 steps in. Otherwise, this is not good, you know? So today's going to be interesting. I always say that. I know I always say that. But it is always interesting. Trading is interesting. Fact, period. Okay. London session was fun. We took three trades, 2 small losses, and then 1 big winner. So I'm going to break that down after. But before we do, let's actually get get the show started with our one and only future slaying, matcha drinking, self-muting, hawker walking, stranger hugging, Slack notification hating, do not disturb mode forgetting, bottom tick loving, not rap battle killing, non-official Disney princess, girly trader, matcha mommy. Good morning, Mary McKen speak.
Oh man, what an intro. Good morning, Matt. Good morning, Nick. Good morning, Tradeify Nation. I hope you guys are all doing well today. I have a little bit of a different setup today, so I don't look like I'm completely being held hostage. So gave myself a little bit of texture in the back. So hopefully that'll ease some minds. But I'm ready. I'm ready. It's the last day of the month, as Matt had noted here. We got some data that came out. We're gonna go over our trades, what we're looking at today. We got Ryan on today. I'm super excited to interview him and get his story. He has a really cool story to share, and we're going to get into it. So before we do that, let's do the market wake up.
Oh yeah.
What the fuck was that?
Sound like the Kool-Aid man. Oh,
Yeah. Matt, I say that every single day after this intro. What are you talking about? Every single day I say, "Oh yeah," after this, because it's just, it's just motivating to get started. But let's actually go over NQ and what we did so far. This is the 15-minute chart that we have up here. We had the daily open on NQ at 23,760. I left a bit early yesterday, but I rewatched the part of the stream that I missed, and I saw that background Nick Lil Degen took a pretty epic trade. So
he killed it. He got the money.
Order
He
filled.
got the money gun out and everything. It was awesome. So if you guys were here for that, it was great.
Good. That's how it should be. So congrats, background Nick. That was sick. I also saw Miriam had internet issues as me, so that was fun too to watch.
That was great.
So basically, just Matt carried the entire show. But anyways, daily open at 23,760, and since then just a steady move down. We established Asia high, pretty much at Asia open here at 23,755. London high at let me go down here with my cursor, 23,737, and London low is currently that one I can't say currently because it still could still move, 23,612. Very interesting today. We're like Matt would say, we're humping VWAP, and we're using it as rejection. Like, we're staying below VWAP all the time. We touched it at 8:30 p.m. yesterday, then again at 11 p.m., then again today during London Open at 3 a.m. And right now, same thing again. VWAP is acting as resistance, and so far we couldn't break through it. So that is definitely an interesting level to watch today. I like these days where we reject VWAP multiple times and very cleanly, because you can then usually assume that trend continues until you get a clean break. So that really helps to look for direction. However, if we zoom out here, and I've been talking about this trend line that we broke, the red one, right? That we broke, retested, and then moved higher like we anticipated. I do still think that we're going to move higher, right? Although my bias for today is that we're going to move a bit lower into weekly open, grab some liquidity there, and then move higher back to daily open and maybe even previous day high. Again, I'm not trying to predict the price, but that is my bias. And if that changes, if I see that I need to react differently, then I will. Today during the London session, actually before I break down those trades, just if we move up, daily open I said at 23,760, which is important. Then previous day high at 23,804, which is important. And then of course, previous month high at 23,845 and previous week high at 23,880 on NASDAQ. To the downside, as said, important levels, weekly open at 23,602. And then if we go even further down, we have New York low from yesterday at 23,572 and previous day low, like the entire day, including all the sessions, 23,487. So these are the main levels for NASDAQ. Now, I got a surprise for you guys. Flashbang. Flashbang charts in white, especially for you. We had 3 trades during the London session. I tried a long before London even opened, actually at 2:05 a.m. London opens at 3 a.m. Eastern time. I took this long because it was looking very nice. It was a very nice fractal model trade. If I go back here, in the replay. Going to see it on the indicator as well. You see, we swept the previous hour's low very cleanly, came back into the previous hour's range, and then respected equilibrium and started pushing out, which is a clean fractal model trade. However, if my dumbass would have gone to the 4-hour chart, I would have seen that we are in a downtrend, and it didn't make sense at all. What was a bit annoying about this trade was that I got stopped out, literally bottom ticked when London opened, and then we started pushing back up, and I was like, okay, if we get a change in state of delivery here at the 23,730 level, I'm going to re-enter this. I re-entered it and immediately stopped me out again. And I was like, oh, okay, yeah, I'm in a downtrend, so I should probably look for shorts. Luckily, I pretty much right after found the short setup and then wrote that for 39 points, which made up for all the losses and then some. And we all banked during the session. So if you didn't join London, missing out. Definitely join the next one. But now let's go over ES with our one and only
All right,
Mary.
let's pull up. So I have NASDAQ here on the left, ES on the right. Wow, what a rally we got yesterday, into the afternoon. Like I said, Lo and Nikki got this trade really well. And, we kind of continued this. But right now we are starting to pull back a little bit from those highs. So this is, like I said, the 1-hour chart here of NASDAQ. Let me just go over ES real quick because we did put in that high at 65.23. So right now, that is the current session high of the RTH. So right now, we are like I said, we are pulling back a little bit, back down below the 500 level. Again, this is still that level that we are, kind of respecting right now, even though we did put in that high yesterday. It is a level that, continues to be of importance. So right now on ES, like I said, if we, if we can reclaim this 500, I think we have a chance back to break these highs here. But right now, we do have a supply zone currently sitting. This was from the pre-market. I'm not totally in love with this, but it is an area of consolidation that I will be looking at for us to potentially reject. Right now, it's sitting between 65.08 and 65.15, so about an 8-point supply zone here. To the downside on ES, you guys can see we held this 64.80 level really nicely. Multiple points of, we bounced multiple times yesterday, and we never were able to get down to these 70s and the 60s. Right now we do have a demand zone right here sitting on the 1 hour. You guys can see we created this on Tuesday of this week, and we came down, wicked right to it on Wednesday in the pre-market, and then ever since we've been rallying up. So this will be a demand zone, but before we even get there, again, I would look for previous day low to also hold as support if we do get down into these areas. But if we do break the 64.80, I could see us filling this 1 hour wick down to this demand zone. So it could be a nice call it like a 20-point plus play on ES, which, as you guys know, if you've heard me talk a lot, 10 points on ES is a great profit target with minimal risk there. I mean, if you risk like 5 points on that, I think you can get a good setup there. So we'll be monitoring these areas. Otherwise, we are looking at creating these new highs on ES. But right now we are creating higher lows as well. So we got to look a little bit bullish at the moment until we can, prove otherwise. But on the NASDAQ here, you guys can see I've had this supply zone sitting on the NASDAQ for a minute. If I go to the 4 hour, I'll show you guys where I got this supply zone. This was the same area I was talking about yesterday. In the open, we did, well, not in the open, but essentially we did come up to this area, in the pre-market, and we tested it multiple times. So in terms of getting up here, we weren't quite able to clear it. You guys can see we pretty much topped the supply zone. The supply zone, we're like two points away from actually clearing it. So we were we did get a rejection technically of the supply zone. It hasn't fully broken through, so I'm just going to keep it up here for visualization purposes. But it's not the freshest zone anymore, but I would say it's still intact. I would like for us to actually clear this area, and again, it's the 23,808 level, and I think if we clear that, I think we have room up to the 880s. That's the next area of resistance that I see here on the NASDAQ. But right now on the NASDAQ, a little bit weaker than ES. Like I said, ES making new highs. NASDAQ is not really anywhere near that so far. I mean, we're still about 200 plus points away from that area. Call it 400 almost. But yeah, in terms of, downside moves on the NASDAQ, we do have this demand zone sitting here. It's a 2-hour demand. And if we can come down here to previous day low, I would expect some sort of reaction here. Otherwise, if we break down below previous day low sitting at 23.57, call it 573, 572. If we get down here and we start breaking through it, I think we would try to hold the 540s. Otherwise, if we break 540s, you guys can see 540 area was a pretty strong support area ever since, this week, really. I mean, you guys can see very flat support zone. If it can break, call it like the 530s, I think we do start moving down possibly into this 487 area has also been a support level, but we could move down into the 430s. Breaking those, obviously we would get down into, call it like the 340s. So we still haven't quite gotten down. I mean, even every attempt the Bears have made, we weren't able to fully get down and fill this imbalance. So this was the imbalance from last Friday from the Jackson Hole Symposium. So we weren't ever able to quite get down there. So there's still room for the Bears to leave their mark essentially. But again, we've just really been making higher lows. So right now the chart looks bullish. So we just got to assume that bulls are kind of taken over until bears prove otherwise. So those are the levels right now. I would say clear 800 previous day high, and then we're looking at previous day low to act as support currently. And we'll see what we get. We're gonna have to wait in the first, I would say the first 15 minutes. It's a Friday too, so typically on Fridays, we get some sort of craziness
Order
happening.
filled.
And that being said, we don't want to participate in that craziness. So just make sure you guys are aware of your position sizes. If you guys are green on the week, don't get too crazy today. You don't want to go into your weekend, fighting for some peace. So just make sure that you guys are aware of that. But that's all I have to say on the charts so far. Matt, why don't you walk us through
Order
and gold?
filled.
Yeah, it's a good statement for life as well. I think at any time when you can just say, you know what, I don't want to be a part of that craziness. I think that's usually that's good life advice in addition to good trading advice. So thank you, Miriam. Before we move a little further into that, though, I do want to just talk, add a couple things to the index talk. So this little bit on the news feed came up this morning. The SPX, historically, the S&P 500 struggles in September with higher volatility and an average return of negative 0.7% since 1964. The index has
Order
risen
filled.
only 46% of September's, making it one of the weakest months of the year. In addition, guys, we do have a slew of news coming out at 9:45 Eastern. We have Chicago PMI. And then at 10 o'clock Eastern, we have some of the Michigan consumer sentiments. Nothing of this is red folder or high priority, but it is all stuff. Anything price index, consumer sentiment is going to directly affect potential interest rates. Next week, we're going to start paying really close attention to the Fed Watch tool. We're going to see, we should have a result of the what's going on. Apparently, the Fed has issued a statement this morning that they're asking the courts to fast track this whole situation with President Trump trying to fire Fed Cook. And they've said, well, they'll abide by whatever the court's decision is, which is basically one way or another she's
Order
out
filled.
because the Supreme Court, we know, will back up the president on that. So whatever the timetable on that is, between that and Fed Waller coming out in the last 24 hours and basically criticizing his colleagues for not cutting rates, I think we can expect a pretty heavy chance of a rate cut in September. I would expect even in the next couple of weeks, there'd be a pressure campaign to go more than the 25 basis points, which is